Finding profitable trades in manic markets. Again, my name is Don Kaufman, and you are watching a TheoTrade presentation. First and foremost, here is a formality. It's a risk disclosure. We're not financial advisors, nor a broker-dealer. And I throw this up here also because I was in the brokerage business for a number of years. I'll describe that to you here momentarily. Next, we throw up the copyright disclaimer. This is ours. This is not yours. Listen, if you ever need to get a hold of me after this evening, and that's one of the real reasons that we put this up here, you need to get a hold of us, okay? All of our contact information is right here. So we have an office in Scottsdale, Arizona. Most of the year, I actually reside in Scottsdale, Arizona. This is a little unusual, but yeah, if you need to get a hold of us, though, the easiest way to get a hold of me personally, right there, support@TheoTrade.com. We use what we call a common inbox. All you have to do is put Don in the heading. It'll go directly to me. So if you want to get a hold of me after tonight, just Don@TheoTrade.com. And that's important that you guys know that you can reach out to myself or really any of the other traders here at TheoTrade. All right. So tonight, let's just jump right into it. This is why you're here. All right. And there's a lot that's going to go on tonight. I'm going to pack a tremendous amount and probably, I think we're going to run an hour and 20 minutes. Is that all right with everybody? I know we're scheduled for an hour, but I'm telling you right up front, we're probably going to go a little bit over. And I hope that you guys will see past that. I put a little extra into this evening's presentation. And as I'll state, anytime you come to listen really anything specifically by me, by the end of a webcast, okay, I want you to be able to walk away with definitive knowledge, something that you can actually use literally, okay, in the next trading session. So the first thing that I'm going to detail a little bit tonight, and again, I'll kind of go through a couple of the aspects here. Find which strategies have become the bread and butter of trades in TheoTrade and volatile markets for both investors and traders alike. One thing I want to key into in this statement, you're like, blah, 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 right? Investors and traders alike. Okay, I do differentiate. Tonight, we're actually going to talk a little bit about both. So if you're an investor or if you're a trader, and if you're somebody that's just a buy and hold, I totally get it. And I'm telling you, you're going to want to pay attention tonight. If you're somebody that's a more active trader, I think a lot of people right now are a lot more active. Why do I say that? I saw that TD Ameritrade, they're doing over 3 million trades a day right now. 3 million trades a day over at TD Ameritrade. Number 2 on here. See where some of your largest market opportunities are really going to exist and what strategies you can use to harness these trade ideas. Right now, you want to focus big opportunities because there are some. All right. Number 3, why markets are going to remain volatile for years to come and how to really capitalize on it. I'll just give you a quick example. I don't know what you consider volatile, but we still have a VIX. And I'm not a huge advocate of the VIX, but the VIX is still sitting in and around the 30 level. That's pretty amazing given the fact that the S&Ps have just rallied, and rallied even further, and yet the VIX resides at 30. So call it what you will. This is still a very volatile marketplace. Number 4, discover how to build trades with limited risk. Okay, and really how to maximize those returns. Number 5, find out how you can short markets, okay, and individual stocks, even inside your retirement account. This is one really critical aspect that we're going to be discussing tonight. Listen, I am not here this evening to convince you to be, you got to get long, you got to get short. But I'm telling you, you're going to have to be a little bit, let's say, well-versed moving forward in this business. Okay, does that make sense to everybody? And again, these are not rhetorical questions. I'm dead serious when I say, chat in, feel free if you're watching this later, talk to the screen, people. Make sure that you understand both long, okay, and short. And we're going to be discussing that a bit tonight. All right, number 6, how you can generate weekly returns while offsetting portfolio risk. And of course, number 7, you're going to see numerous real trade. It says examples. These are just real trades. Tonight, I'm actually going to display my trades to you and what's working and what has been working in this marketplace. Okay, and where I personally see some of the very largest of opportunities in terms of P&L moving forward. Doesn't matter. I don't care what happened 3 months ago. I don't care what happened 2 months ago. You got to make this work moving forward. And that's the critical aspect. All right. So let's dig into it. Before I go too far, for those of you that tune in and will remain with us until the end of this evening's webcast, we're going to give you a little gift. It's $197 value. It's an SPX expected move indicator. I mean, I'm going to tell you right now, frankly, everybody should have this. Everybody should be looking at this. So we're going to provide you, okay, the script to the SPX expected move indicator. I know there's a lot of places that go out there, they develop these really, complicated scripts and they charge you thousands of dollars for it. Tonight, we're actually going to provide you this script absolutely, free. It's for staying tuned until, of course, the end of tonight's webcast. What it's going to provide, I'm going to show you a screenshot in a second. You're going to have it's actually over 3 years of weekly expected moves. These are my hand calculated expected moves. Like I literally went through and instead of writing code for this one, I'm literally drawing lines on a chart. And it's an indicator that really, it changes the way that you're going to view markets. And now with that, I'm just going to show it to you. And again, you stay tuned right to the end of the webcast and I'm going to provide to you a link, and you follow me to the link, and of course you'll be able to grab this indicator, and I will again specifically show you precisely where that is a little bit later. This is the indicator. For those of you who've never seen it, and I'll take you through this, weekly expected moves, they're ranges. Okay, this is this week's expected move, and you're like, what? Okay, it's the expected move, and I'll tell you right now. Okay, if you're at all curious kind of what the expected move is this week, you're looking at about a $72 move higher or lower this week. That's what those lines represent. And those lines, the $72 is derived from an options chain, okay? And then on here, we have what we call highlighted candles. And the highlighted candles, they're breaches of this expected move. So in the case, of the last couple of weeks over here, what I wanted to show you, okay, and why this is such a pivotal indicator, okay, this is a breach of expected move, a breach of expected move, a breach, a breach, a breach, a breach, a breach, okay, a breach. The point that I wanted to make, okay, the entire onset of the Corona panic didn't really happen until right here, right there, in pretty much early March, except that the marketplace was already breaching expected moves well before it. You could actually see the risk and feel the risk coming. And it's one of the things that a lot of people have missed in this business, okay, that you had ultimately, okay, almost 12 weeks in a row that breached the expected move, which is statistically insane. So what the study does is it shows you if the markets are efficient or lack thereof, right? This is, Mr. Toad's wild ride. All of a sudden in just the last, watch this, in the last 1, 2, 3, 4, 5, okay, 5 weeks in a row, we've actually ended up inside the expected move once again. So we're becoming more efficient. But stay tuned on that front because we are right on the edge and we just started the week. So again, I wanted to give you a little bit of insight to this indicator that we're going to provide to you at the end of this evening. So with that, one more housekeeping item, more often running. Housekeeping tonight, it's a skill set. Listen, what I'm going to throw at you tonight, for some of you, might initially be a little bit of a review. For most of you, this is going to be very new material. We're going to move at a fairly fast clip tonight, if that's all right. I speak rather quickly. I say shut the door, turn off Skype. Okay, listen, whatever's distracting you, get rid of Facebook, close Facebook. We don't need no stinking Facebook. Put your phones in silent phone. Maybe kick out the kids, the grandkids, the dog. Keep the dog. All right, listen, you took the time to be here. This stuff's important. Focus on trying to be here with us. And because I'll venture to say you'll miss some really important items if you're not, tuned in, turned on throughout the course of this evening. As I said, I move rather quick. Here's a little bit about me. It's a picture. It's a couple of years ago, maybe a few more hair follicles. But here's a little bit of background on me. I watched order flow for 15 years, and that is in large part of what has brought me before you this evening. And there's a lot of people that just don't know what that even means, and I'm fine with that. When I say I watched order flow for 15 years, man, that's why I'm here. Okay, first, I'll get to the beginnings of this. I actually grew up around the trading world. I don't think a lot of people can say that, but I grew up around the trading world. My immediate family didn't trade, but my mom's brother, my uncle, they traded. And I always kind of, was on the peripheral of that, but, watching it as a kid, Anyway, my uncle started with he started a big trading firm in the 1970s in Chicago. He started with one seat on the SIBO floor. He built the firm to over 500 seats on exchanges worldwide. The firm was called O'Connor and Associates. O'Connor and Associates eventually sold itself to the Swiss bank in 1992. Yada yada yada. In the late 90s, I graduated college. Degree in molecular genetics. I was planning to go into possibly medical school, and they said, "Hey, you got the summer off. Why don't you come to Chicago and, run on the floor with us?" And I started as a runner, a clerk on the SIBO floor, and that was it for me. I loved it from the get-go. You can't put a 22-year-old kid on a trading floor, and then they'll never leave after that. So for about just over 2 years, I worked for a trading firm in Chicago. And then after that, I was invited to a startup firm, and nobody knew what that startup was. It was like when I say I joined it, it was a company called Thinkorswim, and my friends thought I was totally nuts when I went to originally work for them. So I joined Thinkorswim officially in 2001, and I built the education division of Thinkorswim from the ground up, literally. Soup to nuts, built the whole education division, and we took the company public in 2007. I was on the executive team then. The company was then acquired by TD Ameritrade for about $600 million in 2009, and I went on then to run the education division of TD Ameritrade, and that's where the order flow comes in. And you're like, well, what does that mean? We studied order flow at TD Ameritrade. Okay, I was at TD Ameritrade from 2009 to 2015. 2015, I exited the firm, and of course, we launched TheoTrade. It's a little background on me, but my time at TD Ameritrade, I didn't view it this way when I was there, but after I left, I realized, holy crap. Probably the most priceless thing, because I got to watch order flow for 7 million clientele. People, what it meant is we studied everything that you did. Everything. It's not like we looked into your account. We're like, what's Mike doing in his account today? What's Al doing in his account? We didn't do that. We studied macro data. We looked at like people that did this strategy, people that did iron condors, and people that did covered calls, and people that got long stock and short stock. We can tell you definitively who made money, who lost money. Okay, literally the amount that you learned from studying order flow, it was worth billions at the time, and watching billions and others' mistakes. And really, we gained the knowledge of what works best for retail traders. And with that knowledge, what do you think we did? We exited TD Ameritrade to launch, of course, TheoTrade. That's a little background of what brought me here. So this is actually me. This is, last summer. Okay, I still do some TV broadcasts, ironically, for TD Ameritrade. Still have a really good relationship with TD Ameritrade. In fact, I still am on their broadcast all the time. See, a little bit less hair in that picture. And then maybe even a little bit less hair in this picture. This is a CNBC shot, myself versus the man himself, Kevin O'Leary. By the way, I'm going to ruin it for you. The guy is one of the nicest people I've ever talked to. In this particular broadcast, we were about a half an hour delayed because of a press conference that ran over. So I got to sit and just chat with Kevin O'Leary for about 30 minutes. He was trapped in the same kind of box I was, so it was a good time. With that, let's just jump into it, dive into it tonight. Let's go for it. Oh, by the way, somebody said, where did the name TheoTrade come from? TheoTrade means theoretical trade logic. Where did it come from? The inner depths of my mind. With that, you got to have skills. Okay, you got to have skills. There's one thing I'm going to stress to you tonight, and this is not going to be an easy run anymore. And I hope that everybody recognizes that. When I say this, the market, okay, listen, moving forward, it doesn't matter what you think. I'm going to tell you, okay, whether you like this or not, what you're about to see unfold. And take it for what it's worth, okay? And I'm going to show you exactly why it's going to unfold this way, but a trader, okay, moving forward, must acquire a skill set. We're no longer in a market whereby a monkey throwing a dart can be profitable, okay? Those days are over. Now, I recognize, but if I bought on March 16th, I would have made a lot of money right now. Yeah, there's only about 5 or 6 stocks you would have made money in. But the point is, okay, that advisors, and mutual funds, and ETFs, and what they call indexing capital, or a mix of bonds, it is drastically going to underperform traders in the years to come. Drastically underperform. Okay, and I think that everybody's on the same page with that. And please correct me. Okay, correct me if I'm wrong on that one. You're not just going to be the monkey throwing the dart anymore in front of a Mac, apparently. Is that a Mac? I don't know. Okay, you're going to have skills moving forward. Listen, we woke up and you woke up and everything is different. You know, I've been trading, and again, I've been around trading my entire life, but I started trading officially, okay, on a seat in 98. And I'm going to tell you right now, everything that you know about trading and investing over the last 20 years has changed. Okay, there's vast differences. Where to even begin? What you've witnessed over the last 12 weeks, it's not just going to transform financial markets from this point forward, but it's going to transform everything you know about finance in general. Okay, they're going to be writing books about this for 100 years to come. And do not look for a short-term recovery, as there has been long-term fiscal damage inflicted. And we're all looking at what we just saw happen in the marketplace. You're like, but, okay? Listen, you tell me, okay? First, we feel the impact of the current crisis is going to be years, if not decades to come. All right. That's our feeling here at TheoTrade. And that's based on, a whole lot of experience. And I'll discuss that experience in the team here. But, how different will markets be? Okay. One of the things that you have to cope with and come to terms with, okay, is, this, okay, what I term shock and awe. And it's one of the first things that's going to transform finance as you know it. Okay. Everybody is of the opinion, okay, the Fed will be there to the rescue. So here's the balance sheet. And I just wanted to take you through this briefly as you have a little bit of an understanding. This is actually coming into the financial crisis. This is actually the onset of the financial crisis right here, right? So there we are in about 2008, okay? And this is the jump in the balance sheet, okay, at the middle of the financial crisis. It's late in the financial crisis. And then they just plateaued it and leveled it out. They kicked on the balance sheet again in 2011, and they kicked it on again because they thought we could be backsliding right here in 2011. They thought we were going to slip back into the financial crisis. So they kicked on and turned on the juice again. And then in 2013, they kicked it on again and took us to our final resting place of about 4.4 trillion. Okay. That was, of course, until, just a few weeks ago. So here we are over the last 12 weeks. We've roughly gone from, they actually tapered this down to about 4.2 trillion. And here we are. We're actually clean over today, the 7T mark. That's $7 trillion balance sheet. Okay. The first thing you have to recognize, the Fed has done, okay, $3 trillion of damage to their balance sheet inside of the last 12 weeks. They only did $1 trillion back in the financial crisis and bumped it a little higher than that. Okay, but the entire financial crisis has been dwarfed, and all the years, after the financial crisis has been dwarfed by the last 12 weeks. You don't think that there's problems with this system? Okay, they did that, all right, for very specific reasons, and it's what I personally term shock and awe. This was actually to stun the entire marketplace into complete and utter submission. And it's done a hell of a job thus far. But moving forward, I'm not going to make this necessarily easy for you. Moving forward, you better recognize, okay, some serious decisions are going to have to be made. All right. What are you going to do with these investments? You got a 401k, you got an IRA, you got long stock positions, you got mutual funds, you got bonds. You need to determine what your future is going to look like of these. There are many of you that have recovered very nicely. You're like, come on, S&Ps are at 3,000 today. You go bye-bye, okay? Fed's got my back. Fed's got your back until they don't have your back, or until the marketplace as a whole could turn its back on the Fed, right? There are serious implications moving forward. And moreover, when a lot of you think to yourself, you're like, yeah, the S&P's hit 3,000 today. Based on what? The financials are still in the dumpster. Energy stocks are in the dumpster. Okay, what else you got? You're like, I got tech, man. I own Apple. So you got 5 stocks holding us together right now. And we're going to discuss some of those stocks. You got to make decisions, okay? And you can't deer in the headlights. And you can't sit here and tell me anymore like buy and hold, because we very well could have at least a lost decade. And some of you are going to retire in that next decade. So again, I want you thinking logically about your portfolios. And I'm not just, some people tune in tonight. They're like, well, I don't have any stock positions. I don't have any mutual funds. I don't have any bonds. I don't have any of it. I just want to learn how to make some money. And I get that. I do. Okay. But for those of you that do, you have to realize we could have a couple of bad days and finish off the wealth of this entire country in a few bad days inside of the marketplace. Okay. That's it. Right? And that's when the Fed, they won't be there to step in because they already just dumped $3 trillion into the marketplace. That doesn't hold us up. Where do they go from here? Right? Again, probably to buy stocks themselves, but that's probably our future as well. Listen, do not flush your money. Okay? You don't have to learn a massive skill set, but you need to be smarter than some of your competition. You're going to need to learn skills, okay, that can profit from some volatility. And it's important that you understand that, right? So you should also understand that you shouldn't expect volatility to subside anytime soon. Say what you will. Again, we've had a wicked rally back over here. But right now we're staring down the face. And if you're looking at this marketplace, and again, the marketplace is straight up and, the bear has been axed. But if you look at a marketplace that's straight up and you're like, yeah, that makes no sense because there's a global recession or even possibly a depression is underway. Okay, bailouts are everywhere. Interest rates, ZERP or NERP. By the way, ZERP, zero interest rate policy. That's where we are. A lot of Europe obviously is in NERP, which is negative interest rate policy. Japan is in NERP. Are we going to be in NERP? Everybody says no. The Fed right now says no. But if this marketplace doesn't continue to go up and it goes down and all of a sudden they go, NERP looks pretty good. There's a liquidity crisis that continues to brew. And people go, what does that mean? Like everybody seemed to forget what happened all the way back in September, that there were all these short-term funding crises. That crap hasn't gone away. Like there's still a liquidity crisis brewing in the marketplace. Huh? Anybody forget about that? It happened back in December where they're like, oh, short-term funding crisis. You're like, what? It's amazing how quickly everybody forgets, right? The not too distant, it's we're right around the corner from 6 months ago. We were talking about a liquidity crisis before any crisis even hit. Next on the list, stock buybacks. Generally speaking, have ceased. There's a handful of stocks that are still buying themselves back, Apple being one of them. Global oil prices obviously have cratered. Energy sectors are dead. Nearly every industry and service, is going to see epic fallout. Bankruptcy is happening on a day-to-day basis. Right now, we're seeing bankruptcies predominantly in retail and predominantly, in energy, but that's not going to be the last of it. And the depth of the damages, there's one key point to be made over here, right? I know that the marketplace has rallied and probably it's killed the bear, but the reality is, you have zero clarity. Neither does anybody else. That's why most of the companies in this last earnings announcement withdrew guidance. And I just wanted to set the stage, and that's not meant to intimidate you. This is all reality right now with the marketplace rallying, which is fine. I look at the marketplace rallying right now vastly different than most do. It's going to be an unbelievable opportunity. It's not like you get an opportunity like this twice in a row, and it looks like this one is going to be even better. All right. We're going to cover core strategy and trade logic. All right. Right here, right now, I want to introduce to you real world strategy that you kind of start using tomorrow. And I want it to be extremely risk averse. Before I dive head on into the strategy, I want to talk about, what you're going to need in terms of skills moving forward. One of the things, and before I read this to you, but one of the things that I want to get to, the marketplace right now, I know that you see detachments. You're like, it just doesn't make sense. There's horrible news. There's horrible news every single day. And we just keep going up and we keep going up. You have a marketplace that is detached from fundamentals. It's detached from fundamentals. And you're like, well, what does that mean? It doesn't matter. And it hasn't for years. It doesn't matter right now what anybody makes. And you go, what do you mean? What do they make? Does it really matter that you make money? Of course it does. This is a stock market. Maybe. Or maybe this is now a market run by the Fed and quantitative traders. Anybody know what quants are? I'm a quant. Okay? It's a math geek. And a math geek sits behind a screen and they trade for reasons that you couldn't possibly fathom. But I will tell you right now, they're the ones driving this marketplace. You don't believe it? All you have to do is look at the financial stocks. Look at the financial stocks, look at tech stocks, look at energy stocks. There have been constant rotations. What do? Everybody get out of financials and into technology. Until today, in which case today everybody gets into financials and out of technology. They're doing nothing more than playing a little bit of a shell game. And you're going to see a tremendous amount of this. This is where money goes to hide, right? Moving forward, it is going to be imperative for your survival. You're going to have to implement a form of a long-short strategy. Some people are really opposed to this. They're like, what? Okay? You're not going to survive an onslaught of volatility without it. And I say that's a statement. You will not survive in this business the next onslaught of volatility without being long-short. Unless somebody's like, I'm going to cash. All right, so you're not even involved in the marketplace. And by the way, ironically, cash may not survive the next onslaught of volatility. How's that possible? You ever heard of a little thing called hyperinflation, where you better actually have some assets on the books? Okay, so today we're going to discover a strategy you can use in order to profit from stocks heading down or that are range bound without taking on extreme risk. Okay, now it's not going to be as easy as let's get short, but I am going to teach let's get short the markets. I am going to talk about getting short the markets because it's an area, generally speaking, of weakness amongst retail clientele. You're retail clientele. I'm retail clientele, right? So let's dig into this just a little bit because some of you are brand new, right? Who here is new and never shorted a stock before? Anybody here brand new? Again, these are not rhetorical questions. I'm watching the chat. Who here has never shorted a stock? Just say me. Me if you've never shorted a stock. Okay. All right, never shorted a stock. Never. Okay. I'm going to spend 2 minutes reviewing short stock. And then I promise, okay, we're going to go into much more depth because I think that some people, they view this and they're like, this is going to be too basic for me. I promise you, this will not be too basic for you. Even some of the most extreme of traders in this presentation, it's going to be worth your while. Okay, I like to start out very basic. So we're first going to review the short structure, and then we're going to go from there. You know, shorting is effectively selling shares that you just do not own. And you're like, oh, how can you do that? You're borrowing the shares. Okay. You know, how can you sell something you never own? Well, you borrow them. Okay. Shares we short are borrowed from the broker and sold with the intent of later buying them back at a lower price. And I'll just give you an idea. You go out, okay, and you buy, and I'm just going to put this in terms of a computer, right? You buy a Mac, okay, computer. You buy a Mac computer. What do you pay for it? Well, it's a Mac, so it's going to cost you at least $2,000. You're going to buy a Mac computer for $2,000, and that computer is custom for you. You order it online, right on the Apple site, okay? And then what does Apple do? Apple just sold you a computer short. They sold you a computer for $2,000, then they turn around and build it. They slap that piece of crap together. They throw an Apple on it and out the door. And what do they pay for it? Let's say that they pay $1,100. Is that enough margin for you? Come on, people, it's Apple. I'm poking a little bit of fun over here, but it's Apple. There's a whole lot of margin there. They buy the parts at $1,100. I mean, technically, that's selling a computer short, right? They sell it at $2,000. They buy the parts for $1,100. They slap the Apple on there, okay? They even took a bite out of it, and they ship it out, and you're done, okay? There's no difference with shorting stock. But I'm going to give you a quick example of a short stock position. So when people ask me about shorting stock, okay, let's say that we shorted a stock at $135 a share. First of all, what stock is this? Every stock that I give an example of, I don't call it stock, I call it stock. Okay? You have to do that right too. So stock's at $135 a share. What are we going to do? We open the position, okay, by selling it. We sell to open. And that's the weird part. We sell to open. So we sell to open for $135. What do we want the stock to do? You're like, go down. That part's easy. But I want to actually distinguish, okay, where do the shares come from? Those shares, and we could call this Apple, we can call it stock, doesn't matter. But those shares, where do they come from? They come from another monkey at your brokerage firm. So if you right now are like long Apple, okay, if you're long Apple, did you know that your brokerage firm can take your shares of Apple, all right, and they will lend your shares out? And you go, no, they don't do that. The hell they don't. They do that. They lend the shares out. How do they lend shares without asking you? They asked you. You just don't remember them asking you. Do you remember signing what was called a margin agreement? Yep. Even people go, I don't have a margin account, Don. I have an IRA. Yeah, your IRA also has very clear verbiage in it with an IRA. And it says that they are allowed to pull the shares and what they call hypothecate the shares to be lent out to another. So your brokerage firm will actually lend shares, your shares. Does that impact you? No, not at all. It doesn't impact you at all. But people don't like, they're like, what do you mean they're borrowing my shares? Yes, they're borrowing your shares right now to lend them out. I love explaining that. But that's what a margin account is. And people miss that. They're like, I had no idea. Well, guess what? I spent the better part of 15 years in the brokerage world and can tell you all about hypothecation of shares. So they lent you these shares and you sell them at 135. What can happen to you in here? What happens if you sell the stock at 135? Sold! And the stock then starts to run up. Okay, and it could be the next Amazon and it can go to 1,000. What do you do when the stock's at 1,000 and you shorted it at 135? That's when you put your head between your knees and it's not going to be good. Listen, when you short stock, you technically have unlimited upside risk. But, okay, what happens if the stock goes down? Stock value declines and we buy it back for $95 a share. What do we make? $40 a share. Now, let's go for some real deal examples. Is everybody okay with just the brief synopsis of shorting a stock? Stock, all right? Everybody good? Okay. Do you like that one? The Amazon one? You know, people go, stocks do not have unlimited upside. Really? Have you looked at Amazon? Okay. That's about as unlimited as it's ever going to get in this business. So, you got to be careful with it. I mean, because what? Short positions have some issues. I got a lot of issues with you people. Listen, short positions technically have unlimited risk to the upside. Think about it. You know, the stock could run up indefinitely. Okay, if you don't believe it, look at Amazon. Short positions also tie up heavy amounts of capital and, okay, they tie up a lot of what? A lot of margin. That is a huge issue. Capital and margin. That's like the two. You know, if there's somebody listening tonight, they're like, oh, that's great, man, but I have a $2,000 account. If you have a $2,000 account, you can short. You just have to do it the right way. And the other thing that's a problem is short positions cannot, not be placed in a retirement account. So short stockholders have to pay dividends too. A lot of people don't know that. If you go out there and you short Apple and Apple pays like a 2.3% dividend, guess what? You're going to be paying 2.3% div in the short shares. No, yes, you have to pay the dividend. So what do we want to do? Okay. We got to get through some of the issues. Again, we have to understand the concept, first of all, of shorting, right? Then we got to get through some of the short issues to lead us to how can we build a short position, right? So I want to build a short position, obviously, because as I said, you ain't going to survive an onslaught of volatility unless you're long short. You're just not going to survive anymore. And that is a blanket statement. And I'll leave that one alone. How can we build a short position? But you got to control your risk, not pay dividends, and place the trades in a retirement account. You have to get all of those attributes, to make that work. But first, let's find a short candidate. So we're going to talk about shorting. In this case, it's going to be an ETF. Is everybody familiar with ETF? Okay, ETF. What is it? The best way to describe an ETF, it's a conglomerate of stocks packed together. Okay, it's packed together and sold to you as one convenient little package. In this case, we're going to talk about consumer staples. So consumer staples, in the current environment, it's kind of unscathed. I mean, a lot of stuff is unscathed in the current environment, but literally a few consumer staple stocks appear to be impervious to recent volatility. What are some of the stocks that have been impervious to vol? Anybody? Anybody? Okay. Come on, people. All right. You tell me, what stocks have not been negatively impacted at all by the recent volatility? Okay. Oh, some people got them. One of the consumer staple stocks, okay, is Walmart. See if anybody else gets it. People are mentioning Amazon. Amazon, though, I would not necessarily, okay, constitute as that. But I like that one. Costco. Oh, another one, which, most people, the makers of Clorox, bleach. There's a couple of them. These have been just completely and totally unscathed. So the one thing you have to look at, though, contrary, in every recent bout of extreme volatility, okay, and this is going back in recent history, consumer staples have actually been crushed along with the rest of the S&P 500. So in most cases, retail and consumer staples have actually been at the epicenter of a lot of sell-side activity in most hideous volatility. And yet, in this particular instance, they were rather unscathed. Okay, we're taking the stance that is probably not, okay, going to be the final story in here, right? Why? Well, there's only so much toilet paper one can possibly consume. I love this one. Leave it to the wonderful internet for somebody to actually take a package of Costco and Costco toilet paper and somehow put it over Arnold Schwarzenegger in the Commando. But I figured it was very appropriate right now. What I wanted to show you, okay, is an ETF product called the XLP. The XLP. This is the consumer, okay, staples ETF. Now, the consumer staples, here's the interesting irony, okay? They were drastically impacted at the onset of volatility, but they've bounced back up substantially. Here, okay, we may have a wonderful opportunity once again. The point that I wanted to make, okay, is the assumption. There was an assumption immediately made when I said consumer staples, oh, they've remained unscathed in the current environment. Have they? Does that look unscathed to you? They got the crap kicked out of them. And yet they bounced back and bounced back quite nicely because the consumer staple ETF ain't just Walmart. It's not just about, Costco. There's a lot of other stocks in here. Okay. Procter & Gamble is actually one of the biggest stocks in here. And the moment some of that demand starts to wane, okay, this could be a very opportunistic underlying for a fast, okay, and violent down move. So we're going to look at taking advantage of just this opportunity. Now, again, I reiterate to you, I am not here tonight to convince you to get short. I'm here tonight to tell you you're going to have to be both long and short in survival mode. Okay? You're going to have to take short positions to help offset some of the possibility of risk that you are long. And moreover, getting short in this environment, plain and simple, might just be an incredibly, okay, tactical and smart thing to do moving forward. All right. Now, we're going to be getting short without shorting the stock. Okay? So I'm going to take you through just a brief example here. Again, we're going to keep it easy. We're going to keep this real, kind of high level. In our aforementioned example, let's say that we just shorted shares of XLP. Okay? In the previous example, we could have gone out and just shorted XLP, which is trading at about $58. But if you shorted shares of XLP, it's going to just tie up a huge amount of capital. In substitute of the short shares, we can elect to buy a put option contract. Now, some of you have no idea what an option contract is, right? It was the first time I threw the O word at you. Okay, I said option. He's like, did he say what I think he did? Okay, so we're actually going to use a put option. Why? Because the put option is going to limit our risk to the premium paid, right? Meaning that whatever the premium is, in this case, it's $4. I can't lose more than $4.35. I'll come to that in a moment. But it's also going to provide us with an outstanding potential, and in this case, an outstanding downside potential. And what we're going to do is we're going to be buying a 62 put, and it's going to define our risk. Now, time out for a second. Time out, okay? I'm taking you through some of the verbiage, but buying a put. For those of you that are brand new, a 62 put. Let's take that right down here, and let's talk about a 62 put. What is a 62 put? For those of you that are brand new to options, who here is brand new to options? Anybody? Brand new to options. You've never traded an option before. Go, I don't know what an option happens to be. That's okay. You don't have to know everything about options. I just want you to grab big broad strokes of logic. Here's a 62 put. You know what? This 62 put is good until the time frame of July 17th, which gives you a lot of time. I mean, it's late May, so you got what? 6-7 weeks over here. You're going to laugh. You're going to cry. But the 62 put, okay, what does it give me the right to do? See, options, okay, there's buyers and sellers. And in this particular case, we're not selling an option. We're doing what? Okay, we are an outright buy. We're going to buy the 62 put, and we're going to pay, okay, $4.35 for it. Now, if you buy a put, it gives me the right to sell stock at 62 bucks. You go, but do you own stock? No, sir, I do not own stock. So why are you buying the right to sell stock at 62? Just in case I want the right to sell the stock at 62, okay? And I'll give you this example. If we buy the 62 put, okay? Let's say the stock goes all the way down to 40. So stock, doesn't matter that this is the XLP. Who cares if it's the XLP? You bought a 62 put and the stock is now trading at 40. What's the 62 put worth minimum with the stock at 40? That's the key. What's the 62 put worth with the stock at 40? Well, if you have a 62 put, you have the right to sell stock at 62. If you have the right to sell stock at 62, can you sell stock at 62? You go, if you say so, man. You have the right to sell stock at 62. You can sell the stock at 62. So let's say that we sold the stock at 62. You go, but I didn't own any stock. I didn't say you did own stock. You sold the stock at 62. So now you're short at 62. And you could turn around and buy the stock in the open market at 40. How much did you make? You made 22 bucks. 22 bucks. Now you understand what a put option can do for you. But here's the cool thing about the puts. You would never have to actually use the stock. You never have to buy or sell the stock. Never, 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 never. People go, well, then why do you trade the put? I trade the put because I don't want to trade the shares of stock. Okay. The key in this, though, is knowing the right put to buy. Again, the key in all of this is knowing the right put to buy. So let me actually take you into the next example. Using a put in place of short shares. For those of you that speak geek, who here speaks option geek? Does anybody here speak option geek? Do I hear option geek? Okay, this is what we call a synthetic replacement. You go, I don't like these terms. Listen, okay, you ever heard of a football? Yeah, the football. You call it a pig skin, except they're not really made of pig skin because footballs are all synthetic materials. Well, guess what? Okay, stock, I don't want to trade stock. Why? Because it's like a pig skin. I just don't want anything to do with it. I want nothing to do with the stock. It's going to tie up a crap load of capital, and the stock is, it's just plagued with issues. I just don't want to deal with it because there's so much capital, yada, yada, yada. Listen, I'm just going to go out and I'm going to buy me a 62 put. And the 62 put is going to, what? The risk is limited to $4 in this case and 35 cents. What do I care? What's the most I can lose? $4.35. Wait, I can only lose $4.35? Yeah, you can only lose $4.35. Now, options traded contracts. So one contract, okay, is equivalent to 100 shares. So you have to take 100 shares, multiply it by 435. Your actual risk in this trade would be $435 plus transaction costs. But a transaction cost these days are like what? They're like 65 cents a contract, okay? People, you're living in utopia. Utopia. I mean, I only left the brokerage business 5 years ago, and all of a sudden, they struck utopia, which is freeness, okay? Free, I think, is pretty good, especially with technology this good. So you go out there and you buy this thing for $4.35, and you're giving yourself some great downside potential. I mean, look, all right, I just want to recap for a second. We're buying a 62 put, okay? So we're buying a put. It's all the way up here, okay? But this stock is at 58. Let me ask you something. Question? Could this stock go back down? Depreciate? Could it even crack through some of the lows that it was back here in March? Okay, maybe down to like the 35 level. I mean, think about the opportunities, but you're like, but I only have till July. The hell you do. You got all the time you need. And I'm going to show you that here momentarily. Okay, I'm not going to put you in a strategy for just the next couple of weeks. So you pay $4.35 for this strategy. Okay, you go out, you buy the 62 put, and it's a bearish trade. It's a bear. Okay, you're like, I've never been a bear before. Well, you should join our team. It's a wonderful group of people. By the way, right now, for argument's sake, I am both long and short. And I want to make that clear. I definitely have some short positions on, and I've got some big short positions on right now. But I also have some fairly substantial long positions. Again, I will show you many of my positions here momentarily. So why we use a put in place of short shares? Well, it's a smarter trade to take. People that talk about just like, I'm going out and shorting the shares. I often want to ask them, what is wrong with you? I know that sounds horrible. It's meant to, okay? Why would you short shares with options being so incredibly liquid? With options being like it is the place to be. The put option is nearly the equivalent of being short the stock. That's what I said. It's nearly the equivalent of being short the stock. It's going to give you almost dollar for dollar, bang for bang, buck for buck kind of risk. Okay? And using the put ties up minimal margin. You know, if you went out and shorted a $58 stock, you know how much they have to tie up? Do you? Do you have any idea how much they have to tie up for that? Okay? It's almost $30 a share. So if you went out and shorted this stock, I'm just rounding it. Basically, they have to tie up $30 a share in your account, and you can't do it in an IRA. This ties up minimal margin. How much margin? Okay? It would tie up $4.35. That's it. Tie up $4.35. What do you want to do? Tie up $4.35 and want to tie up $30 a share? Huh? Oh, be my guest. Number two, this can be done in a retirement account. You can buy put options in a retirement account. Oh, number three, it limits risk and exposure. Okay? You paid $4.35 for it. How bad could it get? You're like, you can get $4.35 bad, man. Okay, but we know exactly what our risk is. Oh, and put buyers, they don't pay dividends. Guess what? The XLP has a dividend. Dividends! You don't have to pay dividends. And the put can actually be held for an indefinite period of time with the use of what we call roll, baby, roll. What's a roll? That's when you actually bounce the trade from June to July, or July to August, or August to September. You don't have to stay on top of it. That stuff's pretty easy. By the way, there's even technology now to automatically roll you out. Did you guys know that? You can actually set up technology that will literally take your position and move it from 1 month to another for you. Okay? You're like, that's awesome. You can sit at home. I can eat my bonbons. Do they still make those things? I can eat my bonbons, never leave, and have the position rolling for me. You can do that. Okay? But I wanted to hammer this into you that I'm not asking you to run out and short shares. Because quite frankly, I think shorting shares is some dangerous crap, especially in this marketplace that, the Fed could come out and be like, surprise, we're going to buy the world. Okay? And they're going to try. But the reality of it is, right? Shock and awe that the Fed is doing is going to wear off. And what you're going to have is you're going to have sectors that are going down with sectors going up. The marketplace, like I'm not bearish on the whole marketplace right now. I don't want to confuse that. Like I'm not sitting here going, I'm so bearish on the S&P 500 because I'm not. Because I'm going to tell you, it's all going to be about sector rotations. Okay. In a world driven by quants and the Fed, it's all about sector rotations. And that's why I'm saying, okay, a barrel of monkeys ain't going to make money in the next decade. Now, allow us to ice the cake. And we're actually going to sell some options premium against our short position. Told you guys you're going to get a lot out of this tonight, and I want to make sure everybody's on the same page. So I'm not done yet. I ain't done by a long shot. Okay. I want to make sure that you guys understand not only the short position, but now we're actually going to sell premium against your shorts. I love that line. I'm going to sell against my shorts. Okay. So listen, initially I went out, okay, and I bought the June XLP puts, the 62 puts. So I own this put. Owning the put is like being short stock. Okay. So it's just like being short stock. So what I'm going to do then is I'm actually going to sell shorter dated, okay? I'm going to sell shorter dated options against the option that I bought. Does that make sense? So people are familiar with like a covered call. In a covered call, you go out and you buy stock and then you sell a call against the stock, right? And it's all fair game. Like you go out there and you collect a buck on here. I'm just doing the opposite. I'm shorting the stock, okay? And I'm selling a put and like collecting $1, okay? And I'm going to sell that put and collect my bucks. Does that make sense to everybody? it's an inverted covered call, except I'm not actually shorting the stock. I'm just using the 62 puts as short shares. You're like, what? This is where it gets crazy. Okay. Yes. In doing so, I'm going to collect additional 90 cents in 31 days time. So for the most part, okay, what I'm doing, and I'll put this into context for you a little bit, is I'm buying puts and then I'm selling other shorter dated puts against it. If you want to see it, okay, I'll put it in even more context for you. And that's this. Recall, we own the July 62 puts. We're just selling 57 puts. And these, I'm rounding it right now. Let's say that we can sell them for like 90 cents. Okay. So if I sell these for 90 cents, the most I can make on them is 90 cents. But listen, I could sell them for 90 cents, but I only paid $4.35 to get into the strategy in the first place. And you realize by selling those puts against it, you just clipped off a huge amount of the risk of the 435. Okay. You can open a position with that stuff. This is important. Okay. Because you don't have to sell puts that are 31 days out. You could sell a put this week and next week and next week and next week. But that depends. How active do you want to be? Okay. There are so many logical reasons to do this. But what I want you guys to see is that you can collect, all right? You can collect premium or collect what we term income on literally a weekly basis via selling premium. You can collect income against, all right, against the puts that you're in. So you're sitting there with this put that you own and you're collecting weekly income. That is going to require a little bit more work. It's a little bit more logic. You could just go out there and buy the put and sit there and be like, bring it, baby. But you don't have to do that. For those of you that want to be a little bit more, tactical, somebody that wants to spend more time in front of the computer screen, you could do that. You could sell shorter dated puts. And you know what? Collect a few $100s every single week against a put that you're already in. Why wouldn't you do it? Now I'm going to further this because there's some really advantageous areas people are unaware of. Skew. Love it or leave it. There are distinct advantages of being short. This is where I love having this conversation because for the first time I've been out there and I've been teaching some classes since about 2002. And really, honestly, for the first time, people are paying attention to getting short. They're starting to see some of the advantages of getting short. They're starting to see why some of the biggest hedge fund managers out there talk about getting short. Okay. The markets, specifically the option market, favors the sale of put options in what's termed skew. In effect, you collect more options premium for selling put options. Okay. If you looked at a call option and you looked at a put option, okay, and the call option was here, the put option was here, you're going to collect more money for the put option than the call option. Okay, you're like, well, why? That's what skew is. And if you would like to see it, bears befriend skew. Okay, when I say bears, look, here's the XLP and it's trading right smack. There it is, $58. What would you rather sell? Okay, out of the money puts. Okay, everything on my right side of the screen is puts. Everything on my left side of the screen is calls, right? Look at the puts. Now, again, the market's right at 58. In fact, we're at 58.11. We're right here at 58. Equidistant puts to equidistant calls. The put is trading for about 60 cents. The call is trading for about 20 cents. Let me ask you, what would you rather sell? You go, holy crap, I never noticed that before. Okay? The puts are trading for 2 to 3 times. The puts are trading for 2 to 3 times what the calls are trading for. It's actually because of the implied volatility. And in this case, they're about 2 times. They're a little over 2 times what the the puts, you're actually collecting almost double the premium on selling the puts than the calls. And this is where you have to look at this and you go, why isn't everybody doing this? How come, listen, I'm telling you right now, survival to the future, this is imperative. That you don't have to understand every nut and bolt of what I'm going through tonight, but you have to understand, okay, this logic. It's imperative, again, for survival the next time we hit a patch of volatility. And I know that everything feels good and it all feels rosy right now in the marketplace, okay? But don't kid yourself. You're still in a 30 volatility. You're still in a 30 VIX. And a 30 VIX is some very, very serious crap. Now, okay, selling premium against our puts. Selling short-dated options against our longer-dated puts. Why would you want to do it? Okay, why would you want to do it? Why wouldn't you want to do it? Number one, it brings in a weekly income stream. Number two, it's actually going to lower our cost basis in the put we purchased. Number three, via bringing in weekly premium, we can profit even if and when a stock stays flat, okay, or is range bound. I'm not going to be right all the time, so I'd like to collect a little bit of premium. Number four, takes substantially less risk than shorting the stock. And number five, selling puts places the option skew in our favor. As we looked, okay, those puts are juicy versus the calls. And that's a key component in the sale of premium against the put that we own. Okay, we call this how to collect income being short. Listen, the idea, easy idea. Okay, we want to achieve maximum reward for what? For a minimal upfront risk. And at the same time, okay, if I so choose, I want to be capable of selling options premium at the same time. It has all the attributes of everything you're going to need, okay, to trade in an IRA, trade in a regular taxable account, okay. It's also, if you're short, it's going to help offset risk. Like I know that somebody inevitably in here is like, you own Apple, and I have no problem with owning Apple right now. I don't. But if the marketplace started to tank, don't you think that some short exposure to the marketplace might be prudent at this time? Okay? Listen, you got to learn this. Limit your exposure and maximize your premium selling potential. It's critical. Huge potential, minimal risks. This is what a risk graph looks like if I just went out there and bought the put option. Okay? Obviously, the upside potential could be huge in the event that the marketplace sells off. Okay? But before I go any further, what other stocks might be suitable shorts? Okay? I'm going to pick on Microsoft for a moment because it's remained almost completely unscathed again in the current environment. Tech stocks appear to be impervious to recent volatility. Oh, did you think I was just going to stop at the XLP? Okay, come on, let's poke a little fun here at Microsoft. All right, and moreover, what could cause technology stocks to take a dive? Again, not a rhetorical question. What do you guys think? What could cause tech to take a dive? Anybody? Tech to take a dive, huh? Who's taking the tech dive? What could cause tech to take a dive? Nobody believes this, right? But why am I actually picking on Microsoft right now? First and foremost, Microsoft is up 45% in the last year and has remained what I call relatively unscathed. When I say relatively unscathed, in the middle of a hideous down move. In fact, let me change this color so you can really see it. In the middle of a hideous down move, you realize that, and I'm looking right here. This is a 1-year chart, so this is year over year. You realize that the worst performance, Microsoft was still up 7%, and has subsequently gone back. Okay, this is an all-time high. ATH, all-time high. We're just off of it right now. Year over year, Microsoft is up approximately 45%. Again, that's why I call it relatively unscathed. Now, why might Microsoft be susceptible to a down move? I'm not telling you that this stock is going to go down, but I am telling you it could absolutely be susceptible because I want to explain to you a little bit about more in detail about some quantitative finance and more appropriately how to pick a candidate over here. Okay? You could say something as easy as this. Why might Microsoft be susceptible to a down move? Okay? Anybody? Some breakup risk, no more Fed dollars. Okay? I love it. Somebody came in there and said bankruptcy. That is awesome, China. Okay? Um, One person hit it. Joan hit it. It's not overvalued because we're not even looking at fundamentals. Only one person got it in here. I love it. Okay. It's a stock that's most frequently held. It's the stock that's most frequently held in 401ks, IRAs, and mutual funds. It's the largest animal on the block. That's the only reason I would consider it. It's the largest animal on the block, and the largest animal on the block would take the largest hit if the S&Ps continue to get hit. This is components of the S&P 500. Who's the biggest of them all? Microsoft's the biggest of them all. The weight in the S&P 500 is almost 6%. The market cap in here is nothing less than phenomenal. I took this screenshot literally today. I wanted you to see these are the top 10. Okay, Alphabet Soup over here is actually bigger than Facebook, and it's almost at par with Amazon. Alphabet over here is Google, okay, and it really belongs in this spot, but they split it into two different components. Nevertheless, J&J is up there. It's pretty crazy, right? These are the components of the S&P 500. Now I'm going to show you something next that's going to scare the living hell out of you. So bear with me on this one, because what you don't realize is what can hurt you. What you don't realize is what can hurt you. This is the largest reason that we strongly suggest that you have a long short portfolio. Okay, Microsoft came down, but most of those tech stocks didn't really get hit. Okay, in fact, what occurred during the big sell-off over here is financials got killed. There's not a lot of financials, okay, in this top 10, is there? Like, look at this. Okay, you're like, oh yeah. Berkshire Hathaway is basically your financial in here. Visa's on the cusp between financial and technology. And it's actually almost, transcends two sectors. But I just wanted to show you that in the top 10, there's not too many financials. Okay, why am I so adamant that you understand a little bit about this and why you should look at Microsoft? Because here's analysis of the S&P 500, and what you may or may not have been aware of. This is the top 20 companies. Top 20 companies. This is, by the way, all these little dots represent 500 companies. Okay, the top 20 companies represent 36%. 36% of the S&P 500 is inside 20 stocks. Okay, how many stocks are in the S&P 500? Oh, 500. There's actually like 501, but neither here nor there because of Google. 36% of the S&P 500 is in 20 stocks. The only problem we have with the S&P 500, okay, of the 20 stocks that represent the 36%, you had 10 of them that barely even sold off. And that's why you need to be aware of a long short portfolio right now. Okay, this is serious stuff. Question is, how would you even go about shorting Microsoft? What options expiration did you select? What should be the delta of the option you buy? What options do I sell against my position? What options do I sell, against it? Like how many rolls? Okay, what do I size the position for my IRA or taxable account? Okay, clearly I've got multiple questions in here listed twice, but you've got to understand, okay, how to size it, when to roll the options, what the delta of the option you should buy, what expiration do I select. Microsoft could be a really, really viable candidate. But even if Microsoft, and I want to tell you something, even if you don't believe that Microsoft's going to sell off, okay, maybe you have a 401k, maybe you have a portfolio. Do you understand that shorting Microsoft and using options to do it would cost you a negligible amount of money, and it would protect you in the event that the marketplace did sell off? That's the point that I wanted to make with this one. I'm not here picking on Microsoft because I think this could be the greatest short candidate. Let me tell you something. Microsoft could be the greatest short candidate ever. But I'm not here to tell you that it is going to be the greatest candidate. What I am telling you, okay, it's the biggest monkey of them all. And if the S&P falls, Microsoft's going with it. Think about all the people right now. There's a few people that are out of work, okay? And I don't want to poke any fun at it. We're going to hit 40 million, okay, this week. Initial jobless claims come out on Thursday. You're going to hit 40 million this week. How soon is it before people start to tap the 401ks, the IRAs for some capital? It's already happening, okay? And eventually they're going to start to hit some of the biggest stocks. The biggest holding right there by weight, you're looking at it. 5.7% is Microsoft. If the marketplace starts to sell off, I strongly suggest that you understand, okay, that Microsoft could be your savior. Listen, here are some examples. Now I'm going to show you my trades. Okay, now you're all in big trouble. This is actually HYG. This is a trade that I've actually done, and I'm back in it right now, but I'm going to show you some past trades. Okay, so bear with me. We're going to take a little bit of a trip down memory lane. I am a big advocate of what we term long short. So in the next couple of moments, I'm going to show you a couple of my short positions. Here is a short position. By the way, what I'm showing you on this screen, this, okay, is a think or swim screenshot. This is a think or swim screenshot right down below over here. In this think or swim screenshot, the exact time I did the trade, literally the moment that I placed it, everything. The buy to open HYG, it was a May 91 put for $3.63. The exact date, literally the date that I opened it was right there, February 21st. I'm telling you right now, February 21st, did I know that the marketplace was in trouble? No, of course not. Okay. All I knew on February 21st, okay, is something that I talked about when I began this presentation. I talked about the SPX, okay, expected move indicator. We're going to give you the SPX expected move indicator a little bit later tonight. And I talked about that. That indicator was displaying that the market was hitting high degrees of risk. If the market's going to hit high degrees of risk, I want to be, okay, where high degrees of risk live. The HYG, okay, for those of you that have no clue what this is, what's the HYG? Simply junk. This is actually a junk ETF. It's junk bonds, okay? I saw the marketplace throwing off signs of risk in the SPX, which then, okay, implied that I should do a trade in junk. And I wanted you to know why I put on the trade. But that's the impetus for putting on a trade. So I put this thing on for $3.63. These are all live trades that I've executed, okay, over time. This was not a tremendous amount of time, but here's the trade that initiated on February 21st, okay? There were multiple rolls, multiple rolls, multiple rolls, multiple rolls. This is the exit. I initiated the trade right here at about $3.60, let's call it 4 cents, because that's the average. I initiated the trade at 364, and I'll skip all the rolls right now because I don't want to confuse the situation. Okay, I closed most of it for, let's call it, 14 bucks. So every $364 I invested, I ended up getting back $1,602. Now, time out for a second. I did not have to do this trade to the tune of $364. I could have done this $3,640 to get back 16,000, okay, 20 and change. It's still a 340% return. And this is a trade that I had some decent size on, okay, but I want you to understand this is the methodology of going through this. This is a short position taken in HYG, right? Again, that's the first trade, and I wanted to show you all the fills and all the history. The next trade I'd like to show you, and again, all based on this logic of a long short portfolio. The next trade I wanted to show you, this is CSX. Now, in CSX, right up here, I initiated the short. Now, again, you're like, why would you do that? Okay, at this point, I'm going to make no qualms about it. By this day and time, this is where the marketplace was. It was starting to get dicey. And when the marketplace started to get dicey, and when I say dicey, okay, this not Disney, okay, it got dicey there. And when it got dicey, when I say the marketplace got dicey, like the S&Ps were getting crazy, so the S&P 500 was actually threatening to sell off. This is only a couple of days after the other trade. It was like, we're moving, baby. I had to find an underlying that was unscathed real quick, and I found CSX. And what did I do in CSX? Here's some of my trade history. Okay, so the marketplace, at the point where I started putting some size on, started to get a little dicey over here. Here's the trade history, the initiation of the position, a credit, huge credits. And this is my final exit of the trade. Okay, all the times, all the dates over there, every, okay, $1,090 I invested, I got back $3,564. It's a 227% return. People, this is an incredibly short period of time, okay, for that kind of movement. I mean, it's an incredibly short period of time. And again, the kind of credits I got for rolling it, this was stellar behavior. This is just the tip of the iceberg, okay? Synthetic shorts, they're going to give you the power to trade massive stocks and index products with just substantially less risk. I mean, you got to have less risk right now. I hope you guys realize everything I'm trying to do is not just to minimize your risk getting short, but the short position itself minimizes risk of other positions that you may have on. And people don't get that. All right, here's the mother of all trades. You ready? This is a live Boeing example. Now, I'm going to give you a little background on Boeing because I want to make no two ways about this. I want you guys to fully understand. Okay, Boeing was not a short-term trade. Boeing, to me, was an investment to the downside. For those of you, if you tuned in, okay, to anything that we've done here at TheoTrade in the last, 6 months, year, 2 years, you would know that I carried, okay, a short Boeing position all the way from January of 2018. Okay, this position purely with options. I have been short Boeing and was short Boeing from January of 2018. Go look at a chart. That was a long time ago. Here are some of the positions though, and you can see here's a roll for a big credit, a credit, huge credit, a huge credit, a huge credit, a huge credit. Here's the final exit. Now I did not put my return on investment here. I didn't put the return on investment here because I didn't think it was fair. There were so many trades over multiple years of me putting more trades on, rolling it out, rolling it out, rolling it out, rolling it out. Okay. This trade though, I wanted to see the exit. Those are some of the biggest exits I've ever had. Okay. It's $147.80. I don't care who you are. That's one contract. That's one contract. Okay. Is almost $15,000 in that case. I had a multitude of contracts on in here. Okay, this was a grand slam home run. And my whole entire, logic with Boeing, here's my whole logic with Boeing. Sooner or later, the Dow will go down. And if the Dow goes down, that Dow will be led down by Boeing. And that had to do, because Boeing was the heaviest weighting to the Dow. Why do you think I chose the Microsoft trade? It's really, really similar in context to the Boeing trade. Moving on from here, This is an email that was sent to me as one of our members, Chris. And Chris emailed me on March 26th. He said, Don, I've learned more in the past 4 weeks managing and defending my portfolios, that I've learned in my entire trading life. Nothing I've learned would have been possible without having tuned into your teachings for the past 2 years. Also, my atomic hedge took a large sting, out of my long-term IRA destruction. You clearly don't have to be a teacher, but thank you for doing so. Stay safe, Chris. And I threw this one in here because this is a gentleman. I went back and forth a couple times on email. He was heavily long short, but we really talked about reducing risk, to carry those positions. And without learning some of the techniques, and these are specifically the techniques that I'm talking about today, this guy's IRA was toast without it. The next one up, Citi. I also carried quite a bit of positions inside of Citi. Citi is also another trade. I don't mind mentioning this. This to me, was an investment, to the downside. Now, nobody ever heard of that before, like an investment to the downside. I shorted Citi and I carried it, for almost the period of a year before it paid me. It paid me, It's Citi. How much could it possibly pay you? You realize at this time it was only like a $70, $80 stock. Look at the close. Look at the close. This is March 12th, March 16th, March 16th. I closed, and in this case, I'm going to be very forthright with you. I only had a total of about 6 contracts on here. But each one of these options was worth close to $4,000. All right, this was huge P&L with really, really minimal upfront risk. That's the Citi example. And by the way, I had a lot more trades on Citi. We laughed, we cried. The marketplace, when it came off and came off big, and just huge profitability in a short period of time. And we're set up for it right now. It's ideal right now. And I'm not talking about in the past here. I hate showing a trade from it's March 16th and the market sold off. Yeah, but right now, the opportunity is possibly better than it was back in March. This is a Lulu trade. Oh, me and Lulu have gone round and round. I opened Lulu, and I want to show you something. I opened the Lulu trade all the way back on January 28th. There was no corona in January that anybody was really talking about. With all seriousness, nobody was looking at this, I opened the Lulu position for $24. I never even got time to sell premium against this. Okay, there was one roll in here. I closed it for $116.65. Every $2,430 I invested, I got back $11,665. It's a 380% return. That, people, is the mother of all trades in a very short period of time. And I'm not telling you, this is not overnight. This is not designed to be overnight. Okay, and this does not include options premium that I could have sold against it. Okay, now earlier tonight I was talking about the XLP. Why do you think I was talking about the XLP? By the way, Lulu, ooh, I have a love-hate relationship with this one. I could go on all day. Yoga pants. By the way, if you haven't looked at Lulu on the chart lately, it's basically at an all-time high. An all-time high in the middle of like the great retail depression. There's depression going on in retail stocks. But don't worry, yoga pants people, they're going to save the world. Okay, this is one, better believe I'm stepping up back into Lulu. The next example, this is the XLP. Now, why do you think I actually brought up the XLP earlier? It's because something that I've held, okay, considerable positions on. I wanted to give you the full Monty. The full Monty in this case is showing you the full position. Here's one. If you look very carefully, I know it's small. It's small because there were so many positions that I did. Okay, this was opened on September 4th and September 13th of 2019. These are trades all the way back from 2019. You're like, why the hell are you showing that? Okay, because I had no clue that XLP was going to tank. No clue. Why did I want to short XLP at the time? Because it was a good opportunity. It was an excellent opportunity, and there's some specific criteria. And I went through and I sustained the position and sustained the position and sustained the position. And all of a sudden, look at the heavy credits getting out of that thing. Huge. Okay. The XLP, again, a very meager product. You know, this $50 or $60 product becomes a grand slam home run in terms of profit and loss, in terms of percentage gains on it. So those are some of my trades in terms of the XLP. And again, you can see everything all the way from September. And I carried this position into March. Okay, you're like, that's a long time. Yeah, why not? Okay. I mean, people are always doing something different. I do the same thing again and again and again and again. To sell a little premium, do a little dance, make a little love, come out profitably. Next one, Caterpillar. I'm bringing up Caterpillar right now, okay, because I've got specific trades on Cat. So Cat's an interesting one. For the record, I was short Cat for a very long period of time. It came off big. I covered Caterpillar in here. Okay, what you're going to see, I am now short Caterpillar once again, and I'm short Caterpillar right in this neighborhood up here. I didn't try to catch the top. I just figured it was a great short position before. It'd be a good short position again. Here's Caterpillar. These are the opening positions. I reopened the position on April 9th. It's a position that I am currently in. Okay, you can see exactly what I paid, the date and the time, every $2,400 I invested. Okay, if I closed it right now, I would get back $3,450. If I closed it today, I'm not closing it. Okay, Caterpillar, hold it. Basically, I'm up 44% since inception. But that's only what, 4 or 5 weeks ago. Not half bad. 6 weeks ago now, right? Okay, these are all positions again that I currently have on. I'm also back in the Lulu trade. I mentioned Microsoft today. Okay, yeah, I'm carrying a position in there. This is another email that was shot into me from what our members are saying. This one's from Brian. Don, wow. I want to again say thank you for what you've taught me in the last 2.5 years. I bought into what you taught about risk twist spreads and duration positions. By the way, I'm talking tonight. These are duration positions. And started to trade options almost a year ago. I've missed out on the last of the market move up. But at the moment, okay, my IRA is up 14.8% for the year. What I've invested in TheoTrade has been so worth the money. Thank you, Brian. By the way, this email, just so you guys know, I know it says yesterday, but I took a screenshot. This email came in mid-March. Okay, so this gentleman, Brian, and I don't mind bringing up an email from mid-March. This gentleman, Brian, okay, is up almost 15% in one of the largest market crashes in history. I mean, since the Great Depression, it's the largest market crash, and this guy's actually up 14%. Okay, listen, what I'm teaching tonight, you don't have a lot of time. Okay, it's not a problem. But I do want you guys to understand that right now, you probably do have quite a bit of time. Most of us, if working, probably working from home right now. Okay, I am. All right, I don't need no stinking office. Listen, each and every trade that I shown today, okay, all the trades I showed today were displayed live at TheoTrade. What I'm saying is all the trades that I did were done in front of TheoTrade clientele. I execute live trades. We text trades out. We let people see, again, kind of the full Monty. The trade results we're showing, however, are perfect for part-timers. In terms of options strategies, the one that I'm displaying tonight is by far and away the most hands-off. Okay, you can use set and forget order types, fraction of time. This is basically put it on and wait. You know, not everybody likes to do that. Some people are like, I want a little bit more action. I want some more action. Listen, we've got all kinds of strategies to teach you if you want more action in the marketplace. But for those of you that want some hands off and you need, okay, a little short exposure, and I'm going to argue that almost every person in here needs some degree of short exposure. You just do, okay? You got to get some short exposure. This is a very hands-off way to do it. Here's a couple of characteristics of what we term collecting income being short. So the attributes of going out there, buying a put and selling other puts against it are undeniable. You never have to buy the stock or, okay, sell the stock for that matter. You don't have to buy or sell the stock. You define your risk. Risk is limited to precisely your comfort level. So defining risk, remember earlier we were talking about that $4.35? You defined your risk. But then the risk is precisely to your comfort level. Do I do 1 contract, 2 contracts, 3 contracts? Okay. You can actually fine tune this. You want $1,000 at risk. You want $400 at risk. Okay. You never use a stop order. A stop order, guess what? The word stop is a 4-letter word. This is a perfect trade to reduce risk of a stock portfolio. And I've been harping on that one because I'm telling you, we have one bad day, okay? And a huge amount of wealth in this entire country is going to be decimated. And you don't believe it, I'm telling you, sit tight. You're going to have a rough ride and realize, okay, I'm going to tell you guys a little insight to the marketplace. More brokerage accounts have opened in Q1 of 2020. More brokerage accounts have opened in Q1 of 2020, okay, than ever before in the history of this business. So what you have right now is you have one of the most volatile markets in history, okay, with the most what? Okay, neophytes in history. You don't have to be that good. You just got to be better than the other. And I'll give you an idea. TD Ameritrade, TD opened 600,000 brokerage accounts in Q1. Most of those brokerage accounts were actually opened in March, the second that lockdowns, okay, came on. This company right now is doing 3 million trades a day. Okay, this, I'm telling you, is the greatest time to ever be involved in this business. All right, it's the perfect trade to reduce stock portfolio risk. And it's also an excellent tool for those that are trying to seek returns to build a smaller account. Like building these positions, listen, the option side of the business, and I always like to say this, the option side of the business, don't let options intimidate you. Okay, I can't stand that stuff from people. I don't care whether you're, 15 years old or 75 or 83 years old. It doesn't matter. Nobody's too old to learn how to use options because the options are going to mitigate. They're going to control some of the risks out there, right? Listen, okay, don't let it intimidate you. The trade below is being done for a $4.35 debit. But you got to understand, these trades, okay, and options in general, they're power saws, okay? Power saws. They're a great way to get the job done. A power saw is going to slice through a tree, a board, a 2x4 in a second. Used correctly, the power saw, it's quick, fast, safe, easy. Used incorrectly, you're going to lop off a couple of fingers. Options are the exact same thing. Used correctly, they're going to be fast, they're going to be a safe way to correct your portfolio and help create really good returns. Used incorrectly though, same thing. You're going to cut off a couple of fingers. All right. But do not let the option side of that business intimidate you. Okay. You can handle getting short and collecting income. Maybe you don't know options. Maybe you have limited experience in placing option trades. But as I keep saying, don't let the options portion intimidate you. We can show you the how and when to place these strategies in a matter of a few hours. And what you have to also recognize, you're going to need this stuff. Okay, for the foreseeable market future. That's one of the things that people don't, I'm just going to go out and I'm going to go buy some biotech stock. I'm going to buy a marijuana stock. Okay, people are about to get their heads handed to them. They don't realize what kind of risk you're walking into. This marketplace, this is no joke, right? This is the most serious thing any of us, including myself, have seen in our entire career. Come on, I got in this business in 98, 99, and 2000. The internet boom was nothing. 2008, nothing. Okay, we didn't have 40 million people unemployed within what? A 12-week period of time. This stuff, okay, this is the big one. Listen, what we do here at TheoTrade is we create detailed recipes for every strategy, including getting short and collecting income, okay? We literally build recipes, okay, like a recipe list, a book that you can walk through, just like if you were going to bake a cake. You know, what do you have in a cake? You got a couple eggs, some flour, you know. Listen, I probably could not bake a cake to save my life. Give me a recipe, I can do it. Unquestionably, I can do it. People, they go out and they just put on positions blindly in this business. Why? Okay? Almost everything you do in your life, you follow some kind of recipe. I mean, I'm serious. Forget about baking a cake. Everything you do in your life, you're methodical. You wake up in the morning. For those of you that take a shower in the morning, it's the exact same thing day in and day out. You brush your teeth. You do this. You do this. Okay? It's methodical. People that trade, they suck all over the place because they don't have any recipe to follow. And it's ridiculous because the rules, your rules come up as you go along. You go, I'm going to add a little bit of this, a little more sugar, a little more apple. Okay? It's ridiculous to watch people in the retail world, okay, with real capital at risk that you worked hard for without anything definitive behind them. That's one of the things you have got to understand about this business. You have to have a recipe. You have to have definitive guidelines to drive you, okay, to these strategies. Listen, another one from what our members are saying. This is probably one of my favorite ones. It's from March 27th. It says, "Hi, Don. Don't know if you remember, but I emailed you a few weeks ago and told you that my delta was positive. This is positive delta, a couple thousand or more. You told me to smash it or I was going to be in trouble. I smashed it. You saved my account. I just want to thank you. For your information, before Theo, I had no clue about Portfolio Delta. Big hearty thanks to you and all of your team. My finances would have been a goner without your advice. You could use this if you want." Well, Todd, I am using it. Thank you very much. This is from Todd. And by the way, smashing Delta, the way we smash this Delta is by actually offsetting his risk by doing none other than collecting income being short. Listen, this all comes to a head, but this is what you need to know to collect income being short. First of all, what makes a viable short candidate? Like, what stocks would you want to go out and short right now? Okay, you know some of mine. I already threw them up there. Huh? You could do XLP, all right? Maybe a little Microsoft. Huh? What else you got? What stocks do you want to short? And this is where you're like, Okay, I'm going to tell you what. It varies. Why does it vary? Because you have to know what the volatility should be. What volatility should you seek out? You know, if you get yourself into a high volatility situation, you are dead. You know, you think you're going to go out there, what are you going to short? You're going to short Tesla? Okay? You know how many people Tesla's taken out? There's no way in heck I'm going out there and shorting Tesla. Not even with a defined risk strategy. Okay? You got to be a few fries short of a Happy Meal in that kind of volatility. It's not safe. And that's one of the things I'll point out. I want to get you into risk-averse trades. So you got to understand, when you're selecting a candidate, you're actually going to judge that candidate by volatility. You're going to seek out a very specific volatility. Next, what options expiration do I select? You know, for those of you that don't know anything about options, there's a lot of options on options. Okay, what could I do? Well, right now, you could do June, you could do July, you could do August, you could do September. There's probably in October, there's a couple of weeklies in here. Okay, you can go all the way out to Dece, or could I just use January of 2021? Which one do I select? You have to pinpoint the exact expiration cycle. Without it, okay, you're nothing. Too far out in time, too much risk. Too short a time, you're toast. Listen, then you need to know what should be the delta of the option I buy. Some people are like delta, delta, delta. Okay, we're going to tell you exactly what delta. This is what I'm talking about with a recipe. We tell you the volatility. We'll tell you the expiration date. We'll tell you the delta. Okay, what options do I sell against my position? Remember, we bought an option, then we're going to sell an option. And you have to know exactly what option to sell. And after you sell an option, you got to learn how to roll, baby, roll. How do I roll my options? Okay, how do I build the trade? Some of you could figure that one out. What's the right amount of risk for me? I don't care. Do you have a $2,000 account or a $2 million account? Okay? The right amount of risk is wholly dependent upon you. What kind of risk are you willing to take? This is what we're going to show you here at TheoTrade. This is what we do here at TheoTrade. We create recipes in trading. It's exactly what I've been talking about. What you will find over time is that trading, it comes down to answering the what ifs. What might be a good stock or ETF candidate for a short position? What's the correct options expiration, to buy the put? How much capital do I commit to these positions? What strike price options do I sell and how many of them? What strike price options do I buy? And you're like, oh my, okay? We have the answers to those questions. We build the recipe with definitive criteria. We literally have a checklist, okay, for this. We have a checklist that says step 1, step 2, step 3, and then once we get you into the trade, we have to get you out of the trade. This is nothing different than, I think the best analogy I could give you, you get into a cockpit. Do we have any pilots listening this evening? Yeah, if you're a pilot, okay, fantastic. You get into a cockpit, okay? We'll say it's a Boeing 747. Yeah, you think I was going to say a 737 MAX, didn't you? Okay? You go out there and you get into a Boeing 747 MAX. Okay, I bet you it takes them anywhere from 20, maybe 30 minutes. They got to go through a checklist. This is the first thing they do when they get in the aircraft. They walk around the aircraft. They're like hanging on the wings a little bit. It's good stuff. Okay, they don't just hop in, behind the aircraft, turn the key, and just, hit the gas and fly off. It doesn't work that way. Neither does trading. You got variables. Okay, you got criteria and you got variables. But what is a variable? You have to be able to answer, okay, the variables once you're in the trade. And you're like, well, what do you mean? Okay. What do you mean? What do I mean? The variables once you're in the trade. Okay. The how, the when, the why, at what price, what do you do when a dividend's coming? What do you do if the stock goes up, if the stock goes down, if we're approaching expiration? How do I roll the position out? People, it is just the beginning of the variables that you're going to face while collecting income being short. And that people, that's what we do here at TheoTrade. Listen, you can read what a few option strategies are. In fact, you can Google right now. Go Google. Google, okay? You can Google all kinds of option strategies. Maybe you even know how to build a couple of spreads. You know how to build a few diagonals. You know what a covered call is, yada, yada, yada. What you do not have is a recipe. You're not going to find that online either. You don't have TheoTrade's recipe for success, okay? This is specifically me, 20 plus years of trading experience. But I also had access to client order flow, okay, for 15 years. I've literally viewed and studied millions of trading accounts. I ran education for 15 years at a firm with the largest options order flow in the industry, okay? It's all about criteria. And a lot of that criteria, some people talk about like, yeah, I learned how to trade on the trading floor. I'll tell you about the trading floor. The trading floor, okay, is a bunch of people that are first generation walking upright. Okay, what they did on the trading floor 20 years ago has no bearing in today's marketplace whatsoever. You got to look at what works and what works for you. What's you? You're a retail trader. I'm a retail trader. I studied you for 15 years. We know precisely what works. The entry and exit criteria is really defined, okay, from other traders and sourcing what millions of other people did. Okay, criteria becomes your recipe for success. The following strategy, which of course is collecting income being short, and the corresponding criteria requires the utmost attention to detail. We spent years fine-tuning this particular trade and this methodology and this criteria. And when we approach the section on criteria, you follow the steps to build a trade. We have a full-blown 3-hour course on this. It's available immediately. Okay, we do that because we want you guys to take the class immediately. All right, I can't stress to you enough. This is it, people. This is the time. This is volatility right now. The markets are back at 3,000 in the S&Ps tonight. Literally at 3,000. Okay, how to collect income being short is a course, and again, a 3-hour course. I am the instructor. It's $497. The class, the slide deck that includes all of the entry and exit criteria is the checklist. It's available immediately for download. You enroll for the course, you download it. The course is also archived 24/7 access, okay? Or it has download capability on TheoTrade Mobile. okay, for iOS or Android. We have our own mobile application here at TheoTrade, so you can actually download the entire course. If you so choose, you could watch it even if you're offline, laying in bed, whatever it may be. You can watch it tonight. And we got the class. It is ready. It is in the can. We edited it. It's clean. Okay. And again, you can download it tonight, start watching it, and start to execute positions literally tomorrow. Okay. One little kicker we have for you tonight. We have some pretty substantial bonuses that we're going to add. Listen, before I go any further, okay, I'm going to give you the curriculum in just a minute of what's taught in how to collect income being short. Meaning I'm going to take you through, hey, this is what's covered in the class. But before I even get there, I want you guys to know, at TheoTrade, we do not go out and ever sell you one class as a standalone class. Okay? As I said, we're going to have some nice kickers, a few massive bonuses this evening. Okay? And again, I strongly encourage you to stay tuned because one of the bonuses this evening, okay, you're not going to want to miss. I think you're going to find it, well, beyond entertaining. It's going to be incredibly helpful, okay, for your future in this business. All right, here's the curriculum. Then I'm going to get to some of the bonuses tonight. How to collect income being short workshop curriculum. We're actually going to kick off the class with how to short the market with little capital so you can collect income with a small account. How to use options, okay, to create short positions. Discover how you can create short positions in any retirement account so you're never going to miss the opportunity. We're going to help you identify the most promising short candidates in this class, okay, to give yourself edge and to minimize risk. We're also going to show you proven strategies by seasoned traders to sustain the short positions while waiting for volatility to strike. Okay. A rarely looked at tool will also be discussed obviously in this class called option skew and how it can help you actually finance your short positions. Okay. Then we move on to discover step-by-step criteria. So the class itself is actually going to walk you through step 1, step 2, step 3. And then of course, once we get you into the position, we have to actually work you through the position, roles, everything. What advantages and disadvantages there are of selling short dated or weekly options premium. So we're going to actually have an entire section of the class that discusses premium selling. We're going to discover the benefits versus risk of using inverse ETFs. Oh, everybody asks me, can I do this in an inverse ETF? Can I do this in the VXX? And we're going to talk about synthetic short positions for IRA or retirement accounts. Okay. How to determine position size. Again, whether you have a $2,000 account or $2 million account. And again, all of this, okay, how to roll the positions without having to sit in front of the computer. Again, everything I just discussed could be done in a $2,000 account. Everything I discussed can be done in a retirement account. In fact, every position that you saw tonight was done in a retirement account. I trade inside. Again, I trade inside of my IRA. All right. With that, that's the class. And the class, again, is $497. The class is well worth $497. The class will absolutely blow you away for $497. But here at TheoTrade, listen, I'll give you a little background once again on me, and then I'll get into detail about this. We always say here at TheoTrade, we go beyond one class or one indicator, okay? We kind of get it. You want everything to trade. You want everything to invest, and you want it at one place, and you want it at one price, okay? And a little background on me. So again, I started trading in 98 and I joined thinkorswim in 2001. And early on at thinkorswim, I built the education division of thinkorswim. And when building the education division of thinkorswim, okay, I saw everything that the world had to offer in terms of education. Okay. And I'm going to tell you right now, many of you that are coming here this evening, okay, there's almost 1,000 people logged on right now. Many of you guys that are here this evening, you've probably taken 1 or 2 classes at other places. Okay. I want to just lay something to rest right here, right now. By the way, admitting it's the first step. Come on, chat in and tell me if you took a class. Okay. Yell at your screen. I'm going to lay something to rest right now. Okay. What most education companies are and what they do, they sell you a class. 2 weeks later, they sell you an indicator. Then, after they sell you the class and sell you the indicator, then they force you to actually take another class to learn to use the indicator. Before you know it, you're 3 or 4 classes down, okay? You're $6,000 deep and yada, yada, yada. Then you have to actually buy something to actually put any of that crap to use. Listen, we've had it with all that. It's all garbage, okay? We didn't build this company, anything like that. We get it. Again, you want everything to trade and invest at one place. Here's the first bonus. Bonus number one, we're going to give you access to over 91 classes. 91 classes. A little overwhelming because we don't believe here, okay? Nobody goes out and is, what? I'm ready to trade, baby, because I got a How to Collect Income Being Short. How to Collect Income Being Short is a class. It's ready. It's $497. It's ready. It's available immediately. Everything that I'm discussing down below here is literally available immediately, okay, and on demand. You're watching it, you stream it like you stream Netflix. But we're not just going to give you access to this class. We're going to give you access to every class that we've ever done here at TheoTrade. Why do we do that? Okay, we do it because it's the only thing to do. I don't know, okay, where your strengths and where your weaknesses lie. I don't know how much capital you have in your account, okay? I don't want to pinpoint and say you should collect income being short. I'm going to tell you right now, the skills for how to collect income being short, frankly, that's a class that every one of you need. You at least have got to watch it. But almost everybody in here, you need Guide to Surviving and Thriving in Extreme Volatility. That's another class. Guess what? That class was only hosted 3 weeks ago, okay? Volatility backspreads. Volatility backspreads, again, was only taught, okay, a few weeks before that. In addition, you get the entire library of classes we've done. Guide to Small Account Growth with In-Out Spreads. This is unquestionably the most prolific class that we have, okay, at TheoTrade. On top of it, Small Account Growth with Black Book Spreads, the next big short, which is the Risk Twist class. Guide to Selling High Probability Spreads, Iron Condor, Selling Premium, Minimizing Risk. Day Trading NASDAQ Futures, Covered Calls. Essential Skills for Consistency in Trading. The Top 10 Skills for Growing a Small Account, Pairs Trading. People, I'm just scraping the surface. If you name a genre of trade, I guarantee you we got a class on it. The other thing I want to tell you, 91 classes. Overwhelming or underwhelming? Is it overwhelming or underwhelming? For what? For $497. Would you rather be overwhelmed or underwhelmed? Okay. Again, we're going to throw the full Monty at you. The other aspect of this, there's 91 classes. I did not put together all 91 classes. Okay. We have 6 instructors besides myself, bringing the total number to 7. Listen, we give you tonight access to over $9,000 in classes alone. And I'll tell you right now, you go through some of the classes in here, you're going to see how much time and what kind of quality. Okay. There is no other education firm, okay, hands down, that will come anywhere near what we're doing or touch what we're doing with any class at any amount of money of what we're doing here at TheoTrade. And that one, we're willing to put our money where our mouth is. Here are the TheoTrade instructors. First of all, the pedigree of some of the instructors. First, let me introduce Jeff Bierman. He's an analyst trader and former chief market technician of TD Ameritrade. Jeff Bierman worked with me at Thinkorswim and TD Ameritrade. We worked together side by side there for 7 years. When I left, Jeff left. Why did Jeff leave? Because he wanted to come over here at TheoTrade. By the way, Jeff, you owe him a little bit of a debt. Okay, you owe Jeff a little bit of debt of gratitude because Jeff actually put on half the studies on the Thinkorswim charts came out of Jeff's head. So Jeff Bierman is on our crew here. By the way, Jeff is also a professor of finance at Loyola in Chicago. So Jeff moonlights with us right now at TheoTrade. And by the way, you can see Jeff at Loyola. He's $42,000 for a year at Loyola. Or he's $497 here at TheoTrade. Next in the list, Matt Williamson, market neutral premium selling option strategist. Some people are they want to sell options. Great. That's actually why we brought on Matt Williamson. You want a market neutral. Market neutral means non-directional premium selling strategist. We got him. Next on the list, Corey Rosenblum. He's our senior strategist and a resident swing trader. Swing trading, it's a completely different genre of trading. Listen, I tried to find people, okay, that were in the biggest contrast to my skill set that I possibly could. And that's exactly the team that we put together here. Next on the list, Brandon Chapman, CMT, macroeconomics, technicals, and fundamentals. I'll tell you a quick story about Brandon. Okay. First of all, he holds the designation CMT. So does Corey. So does Jeff. A lot of people don't know this, but 3 CMTs on one crew. Ain't nowhere else in this industry. You got to go to a place like Goldman Sachs to find 3 CMTs. Okay. And we've got 7 instructors? 3 of them are CMTs. Brandon Chapman. Brandon also worked at TD Ameritrade. For those of you that remember, TD Ameritrade had an education division. The education division of TD Ameritrade used to sell a course. The course was 18 months long, okay? And that course cost over $24,000. Brandon Chapman actually wrote the book for it. So Brandon was in the education division. It's actually how I know Brandon Chapman. He was in the education division of TD Ameritrade. He wrote the book for a class that was 18 months, $24,000. I guarantee some of you took the class. Brandon will be the first one to tell you what we do here at TheoTrade smokes it. It smokes it. And guess what? It's $497. It's no longer, $24,000. Okay. Next on the list, we have Steve Slim Miller. 43-year veteran, stock, options, and futures trader. He's into cyclical analysis, okay? Steve Miller is also heavy into psychology of trading. You need it, we got it. Again, everybody has their genre of trading. Then we come on to Tony Rago. He's our NASDAQ futures. He's an intraday strategist. What Tony does all day, he just trades. That's it. He trades and calls out trades all day long in our chat room. Listen, I cannot stress enough. The opportunity to get short and collect income is now. This is a volatile marketplace, okay? It's right now. That was the first bonus. You have access to 91 classes. The second bonus tonight, we're going to give you 3 months unlimited access to TheoStream. So I know everybody freaks out. They're like, 91 classes. Well, okay, you got quite some time to watch 91 classes. But we're giving you 3 months, okay, to a live trading chat room that broadcasts for 6 hours a day. So we're not just giving you 91 classes. We're also giving you a live trading chat room. The traders, all the instructors that I just introduced you to, they provide real trade ideas, real-time market insights and analysis. People, we trade. We also shoot out text and push notification trade ideas. Remember, you saw trades on XLP. You saw trades on Caterpillar. You saw trades on Boeing. Okay, you saw trades, and again, I can go on and on Lulu. What do you think we do all day? We trade. We'll text and do push notification to the trade ideas, in-out spreads. In-out spreads is one of the more prolific strategies, but we'll also do, okay, the collect income, okay, and really, sell premium against that collecting income. With that, there are 5 distinct trading portfolios. The one trading portfolio you might want to pay careful attention to is duration. We have a duration portfolio, which is how to collect income being short. That's what we call it here at TheoTrade. We call it duration strategies. We have daily coaching sessions. We have instructors that will also directly answer your trading questions via email. Now, time out. I put huge weight into this. We're actually going to, people love that 6 hours a day. By the way, I know that some people are like, listen, I got to work during the day, man. I can't watch 6 hours a day of TheoTrade. You don't have to watch 6 hours a day of TheoTrade. We'll do text and push notification if we do a trade, okay? But I will tell you this, everything is recorded. Everything is recorded. You can play it back at any time you want. Every second of every single day is recorded here. And you can play it back at twice the speed or 1.5 times the speed. But put all of this aside for a second. How about this, okay? This whole thing is $497, right? We'll answer your emails. You can email me. You can email Tony Rago. You can email Matt Williamson. Oh, please email Matt Williamson, especially if you're an engineer and have a million questions about premium selling. Okay, Matt's your man. But when I say you can actually ask us real trading questions, I think a lot of education firms kind of shy away. They go, whoa, whoa, whoa there, cowboy. Yeah, we stare that in the face and say, bring it. You want to bounce ideas off me? Bounce ideas. The email access alone is $497. Some people are going to pay, what, to have email access to me for 3 months? Okay, I think it's worth at least $1,000. Access to at least $997 plus support, trades, and insight. Okay, again, I put a lot of weight into the email because it's phenomenal. So now you have 91 classes that we've done. You have access to the live trading chat room. You have access to our portfolios. You have access to push notifications, and you have access to the instructors, directly the instructors via email. In addition to it, we give you 59 proprietary indicators and scans. What is that? Well, these are all codes that we've written ourselves. Okay, this is proprietary stuff. This is the stuff that other firms, okay, they're going to charge you $1,000 for stuff like this. By the way, auto expected move, one of the most complicated, it is the most complicated script ever written. Okay, S&P 500 gravity points, TheoTrade RSI Laguerre, Quantix, NQ, next generation squeeze indicator, the SPX expected move. Listen, that one I'm going to give to you in just a moment. I'm going to give you the link to that indicator this evening. Okay, so hang with me on that one. We're going to give you access to over $1,800 in indicators and scans. And these indicators and scans, there are classes built around Quantix. There are classes built around TheoTrade RSI Laguerre. There are classes around gravity points, expected move. Okay, all of it. There's full-blown classes around the SPX expected move because it's critical. So you don't have to go out and buy an indicator and then buy this and buy a class. It's included. So I've now given you 2 bonuses. The third bonus tonight, this is kind of the special one. There's a live class coming when? This Thursday. Thursday, May 28th, 9 a.m. to 11 a.m. This is a class that I am putting together. Okay, it's critical. Survival guide to controlling your risk. Okay, what we're going to do is we're actually going to look at risk from a couple of different perspectives. I don't care whether you have positions on or not. It's going to change the entire way that you view this business. Okay. You've got to check this class out, Survival Guide to Controlling Your Risk. So we're not just giving you how to collect income being short, patting you on the tushy and saying, go ahead, knock yourself out. We're giving you access to everything. All right. Not only to everything, we're going to give you access also to a class that's coming live Thursday, May 28th. And again, this is during the trading session. This is a class that I put together. Okay. And I put it together immediately because the risk right now with the market having rallied back up is immense. And it's not just for people that are long, it's people that are short, it's people that have positions on right now. If you want to understand your position risk better than ever before, you're going to tune into this class. Okay, this class could absolutely save your financial life in here. The course is going to be archived immediately. I know it's on short notice. Okay, by the way, people ask me, I need to get in. You need to get in here. You need to get up to speed. You need to get rolling before Thursday. Okay, the class is going to be archived immediately. So if you can't make it live on May 28th, it's archived, and it's going to give you access, okay, to it on TheoTrade mobile and on our web, okay? By the way, here's some of the bullet points. What are we doing in the survival guide to controlling your risk? We're going to do risk management. You're going to learn that risk management is survival. Risk management, if you have risk on and you can't understand it, you're already dead. You're going to learn the skills needed to survive, okay, markets, even when your positions are just dead wrong. Dead wrong. Discover how risk control could be the defining factor in your longer-term success and or failure in a marketplace. Manage your capital like never before. We're going to have techniques taught in this course. They're going to forever change the way that you approach markets. We're going to give you like this 50,000-foot view of risk. And you're also going to find out right or wrong. With directional bias, the skills can guide you through volatile markets. All right. So this is a 2-hour class. It's being taught expressly because it's not just about too much risk. Okay. You're going to need a guide to survival in the onslaught of volatility that's coming. Listen, here at TheoTrade, we just include everything you need to invest and everything you need to trade, right? I mean, we do what? We do classes, we do coaching, we do email access to the instructors. Again, I put probably the most weight on that. Not enough people email me. I don't care if I have to answer 500 emails a day. I set aside 3 to 4 hours a day just to answer emails, okay? Bounce questions office. We have a live trading room. Indicators and scans, mobile access 24/7. It's everything that you're going to need to succeed in this business. I mean, what we tried and what we set out to build here at TheoTrade, we tried to build the Netflix for traders. I mean, we have a genre, okay, an entire area of trade for everybody. If you want to do pairs trading, you know what? Some people like technical analysis. We've got some of the great market technicians on our crew, okay? There's something for everybody inside of TheoTrade. Find who you adapt to. Listen, tonight, it's $297 for 3 months. Before I go any further, okay, if you go now to enroll for it, right down below over here, okay, let me make sure I point this out so everybody sees it. You go right down below here, theotrade.com/collect, like collecting income. That's C as in Charlie, O, L, L, L as in Larry, L as in Larry, E as in Echo, C as in Charlie, T as in Tom, theotrade.com/collect. Before I go any further, I want to make something clear. It's $297 for 3 months. This is not a membership. It is not a membership. We don't do that anymore. It's $297 for 3 months. It is not an introductory price. After 3 months, if you want to do it again, okay, we email you. You must email us back and say, I want to do it again. If you want to do it again, it's another $297. Okay, listen, we right now have over 5,000 clientele here at TheoTrade. We have 5,000 clientele because we do right by you, right? There's no membership. There's no reoccurring, crap on your credit card. It's $297 for 3 months. If you love us, do it again. Okay, if you don't love us, don't do it again. It's $297. You're not going to go broke with $297. Okay, you email me one time. If I can save your butt one time, you think it's worth $297? Okay, yeah. And we're going to give you access to how to collect income being short. That's included in this. It's access to over 91 trading classes, all available immediately on demand. There's new monthly classes. Okay, what's the new monthly class? Hey, it's survival. It's survival. Okay, it's how to actually to gauge your risk. That class is coming this Thursday. That new class is coming May 28th. Okay, you're enrolling just in time. Next on the docket here, there's a live trading room. 6 hours a day we broadcast. Tomorrow's Wednesday. Tomorrow we actually broadcast for 7 hours. Okay, because we do a happy hour tomorrow. We gave you indicators. There's 59 proprietary indicators and scans. We give you text and push notification on trade ideas. There's 5 separate portfolios. There's daily coaching sessions. When I say coaching sessions, what's that? It's like a little intimate class that we do every single day. Who does it? Primarily Professor Jeff Bierman. So Jeff handles a lot of the coaching sessions, timely topics, stocks, options, futures. Jeff likes to do a lot of technical analysis. It's fine. The instructors, though, will directly answer your trading questions via email, and we don't shy away. You can literally email us and say, is this trade set up right? And I'll be like, no, that's the worst thing I've ever seen in my life. What were you thinking? Okay. Now, again, I'll clarify. It's $297 for 3 months. Okay. That's it, right? It's not a membership because people are going to ask me that about 1,000 times. Go right now to theotrade.com/collect. Okay. I say that because the first handful of people, which I'll detail here in a moment, is a riskless trade. We'll top this off tonight by making TheoTrade completely riskless. What does that mean? Everything you need to start from novice to expert. Okay, and you know what? I think it's a pretty good time to pull this up. So I'm going to pop this in front of you. Okay, and then I want to explain a little bit about the riskless trade. So when we say everything you need to start from novice to expert in here, okay, what I am referencing, and make sure that we're okay over here. What I'm referencing from novice to expert is just something that comes up that you should be aware of, and that is, hey, maybe you have absolutely unequivocally no options experience. We have an entire Start Here menu, Options 101, Options 201. Okay, before I go any further, and I'm going to take you. This is TheoTrade, and I want to show you a little bit about TheoTrade, and I'm going to walk you through it. Okay, but before I do that, I want to explain about the riskless trade. But again, this is from novice to expert. You have no experience? Yeah, we have Options 101. You're an expert? Believe me, we have courses for you. Tonight, we'll give you a money-back guarantee. Trade with us. Trade with us over the next 3 months if you're not completely satisfied. By the way, we don't put a definition on the word satisfied. The bottom line is, TheoTrade is a whopping $297. Okay? Doesn't seem like much, and it's not. Okay? We do this so that we've kind of democratized a lot of education in this business. If you're not satisfied, just email us support@theotrade.com. Provide us the details of your trades, receive a full refund. We'll give you back your $297. We want you to be happy with TheoTrade. If you are not happy with TheoTrade, we don't want you at TheoTrade, and we understand. Okay, listen, there's some money back guarantee stipulations. You got to do 10 trades using our criteria in the next 3 months. Okay. You have to have an initial account value of $2,000. Hey, listen, that ain't my rule. That's actually an SEC rule. So your initial account value has to be $2,000. You must follow TheoTrade criteria on how to collect income being short. All I'm saying in this one, you can't make up your own recipe book and be like, yeah, this is looking pretty good. Okay, I think these are fair stipulations, right? And you have to provide real account statements of trades. This ain't paper trading, people. Okay, this is real. By the way, we do more than 10 trades in the next 3 months. If you just want to follow our trades, that's fine. Okay, we wanted to make this as clean, as easy, and as simple as possible for you. We wanted to make it a riskless trade. If you don't like us after 3 months, whatever, if you're not satisfied, again, I'm not even going to define satisfaction. We'll give you $297 back. It's $297. We want you to be happy, right? Listen, get into TheoTrade now, okay? We're going to work with you directly. As such, we only give you 40 spots on the riskless deal, okay? Now that's because we can't have 1,000 people signing up for it and look into every single account in an account statement. We do 40 spots. The first 40 people to enroll tonight are on the TheoTrade, the total riskless deal. We'll give you unlimited email mentoring. Send us your trades, okay? $297 is the riskless offer. It's never been available before on how to collect income being short, okay? In addition to the survival guide of controlling your risk. By the way, the survival guide to controlling your risks, okay? This is a class that's coming up, as I'll say again, it's May 28th, right? Obviously, you got to enroll. You got to get in this thing, all right? Again, it's the first 40. The first 40 people to enroll tonight are in under the riskless deal. And I'm going to take you directly to this page here momentarily, okay? Before I do that, listen, I love this, what our members are saying. By the way, you guys are rocking it. Very impressed. It's really refreshing to have you guys putting this together and sharing knowledge and not upselling everything and burning your customer base. You've got a customer for me and for life because of this approach, okay? And I'm sure I'm not the only one. This is from David. Here's another one actually that came in that I appreciate. I'm very impressed with TheoTrade. I've studied under stock coaches, various strategy intellects, and different trading plans. I have not come across anything as good as what I'm seeing here. The people at TheoTrade are very helpful and extremely knowledgeable. I'm looking forward to this association for years to come. Okay. This is from Matthew. You know, Don's the most knowledgeable person I've ever heard in my 50 years of stock investing, and I've listened to many. His knowledge of how the markets work is like sitting next to a finance PhD. Highly recommend learning what this man has to say. So that's a little bit about what our members are saying. Listen, I wanted to throw together, this is a slide that details everything in here, and then I'm going to take you over and show you TheoTrade. I am also going to answer all of your questions right now. Okay. Again, access of everything you get today for $297. How to collect income being short. Okay. We give you 3 months, all access to TheoTrade. Okay. We have 6 hours per day of live trading. Everything's archived 24/7. You have access to our mobile application. We do text and push notification. We give you access to all of the trading indicators and scans. We have daily coaching sessions. Okay. Bonus number 2. Okay, we give you access to over 91 classes. That's day trading and swing trading and technical trading and beginner option traders and advanced options. Okay, everything. The third bonus, this is a class that's coming up, this Thursday. Live class, Survival Guide to Controlling Your Risk. Go right now, okay, to this web address. It's theotrade.com/collect. Now I'm going to go over there because I'm actually going to show you, okay, you follow me to this link for the SPX expected move indicator. So I'm actually going to pop the link in here. By the way, we're here to help you. If you need to get a hold of us right now, listen, there's literally, 1,000 people like tuned in right now. So the easiest way to get a hold of us right here, right now, is to hit us on the chat. The chat is right here where it says we are here. You know, email, phones are going to be completely booked out here momentarily, but click we are here and you can chat with us if you have any detailed questions over here. Again, I'm popping up the address because it's theotrade.com/collect. Again, in this site, obviously, this is the emergency survival guide, survival guide to controlling your risks. That's the class that's happening May 28th. Come in here, click add to cart. Okay. When you click add to cart, I just want to display something on here. There's a lot of people logged on here. That's why it's taken a couple of seconds. So the billing information, it's $297. And again, I want to reiterate one thing. It's a one-time charge. Okay. It is not a membership. It's $297 and that's it. And that's why I really wanted to detail before we went any further into this. By the way, also, if you followed me over to this page, theotrade.com/collect, you click add to cart. We have all the indicators here at TheoTrade, but the SPX indicator, you could also grab it right down below. The SPX expected move indicator is right down below on this page. For those of you, as you're enrolling, don't worry about downloading the indicator. I'll get you the indicator tomorrow or the next day. We can get you suited with all the different indicators because all of the indicators are right here on TheoTrade. So as you guys are enrolling, again, I'm going to answer some questions. It's theotrade.com/collect. But I also want to show you, this is TheoTrade. This is what the site looks like. So this is our this is where our clientele go to trade. Okay. Up here, this is off air, but this is our chat room. This is the live trading chat room. This is a screen that broadcasts. Okay. All right. Next thing down below over here, you can actually see, all right, we've got our clientele. And our clientele just talking to one another. All right. There are instructors that are in here as well. So all 7 instructors in here. Okay. You can see if we're highlighted, that is us actually discussing. Okay. So you can see all of the different commentary that happens throughout the course of the day. Don't be too intimidated, but there can be upwards of 4,000 to 5,000 people in here every single day. This thing rocks during the day. It's great. By the way, the chat room is phenomenal. People are sharing trades in there. We share trades in there all throughout the course of the day, and we're broadcasting live. You don't have to see our face. You get to see our screen. I think it's much more important that way. The next thing that people want to see on here, TheoTrade, this is the start here. Okay, look, options 101, options 201. You know, there's always somebody in the group that's like, I'm too advanced for that. Guess what? Want to be advanced? Come here to order execution. Order execution part 1, 2, and 3. Those 3 little courses, okay, I will guarantee anybody, okay, this whole thing costs $297. You'll save more than $297 on learning how to execute your trades correctly. You better watch all 3 of those. Okay, I'm so adamant about that one. I don't care how experienced you are. Watch order execution techniques. Okay, again, I worked in the brokerage business for 15 years. Pretty much the buck stops here when it comes to how to send orders. The next thing I like to show people on TheoTrade is right here. People are like, let me see what classes look like. This is the class archive. Right? As I said, it's broken down into different genres. There's option classes and option newbies and technicals and day trading and trend trading, okay, and pairs trading and mindset. There's literally psychology classes and stock classes and futures classes. There's something for everybody. You know, I guess my genre is options. I'm your options super geek, and as such, I'm actually going to show you some of the classes that I've done in here. Here's the how to collect income being short. Okay, this is trading VIX options, duration iron condors, fruit fly for consistent income, selling options for a living, guide to maximum trading or maximum edge trading earnings. This is actually earnings butterflies. There's a back spreads class that we just did. Okay, when I say there's a back spreads class we just did, I just did this one on May 7th. Okay, I am one hyperactive individual, so I did a class May 7th. Okay, before that, I had a volatility crash course that was done on April 23rd. Guess what? It's April 28th. We are adding stuff, people. Okay, we are firing at you. Why? Because this is it. This is the time. This is the volatility. This is where you want to be. Last but not least, this is the member home. You know what we do in the member home? We built like a Google search engine for everything. Type in anything you can dream of in here. Like one of the big strategies here is like in-out spreads. You want to know everything there is to know about in-out spreads? Good. Type in in-out spreads, hit enter. Every single coaching session involving in-out spreads is then going to populate into here. Okay, that's TheoTrade. Again, there's something literally for everyone in here. Again, I'll pop the address up in here because somebody was actually chatting in. Okay, make sure that we're good. All right, it's theotrade.com/collect. It's C as in Charlie. Okay, O, L as in Larry, L as in Larry, E as in Echo, C as in Charlie, T as in Tom. So theotrade.com/collect. Now, I'm going to go in here and I'm going to answer some generalized questions for you guys. Okay, a couple of more about what our members are saying. You know what? I'm going to actually read you this one because I think it's that good. Good evening, DK. That's me. It's Don Kaufman. As a multi-decade risk manager for one company, okay, I work for, and owning 2 other businesses of my own, I must say that your perspective on portfolio risk management is exactly how I attempt to explain to those close to me with significant investments. Okay, quantification via standard deviation, okay, of near and long-term timeframes are critical considerations for responsible and successful endeavors, regardless of underlying market-related or otherwise. It was refreshing to listen to your perspective, okay, on the same today. Sincerely appreciate your efforts. This comes from Nathan R. So I always like that one. Now I'm going to answer a couple of generalized questions, and then we're going to jump into some really definitive questions over here. You know, some of the things that always come up, and I want to address these before I go into some of the questions that are obviously in the room. Okay, people always ask me, what do you need? What do I need? You need a laptop and internet connection. In fact, you can get away now. The iPads and Google tablets are fine. So don't tell me, I don't have this on it. Everybody's got the internet. Pretty much everybody's got like an iPad. The iPads now, they're good enough. In fact, I work and trade a tremendous amount now off of an iPad. We will give you, and we have everything that you need to get started from absolute novice to the most extreme. The second thing that always comes up, and I'll reiterate this, and I've already said it 3 times. Tonight, this is not a membership. We're not going to auto-renew you or bill you again. It's not an introductory price. Listen, TheoTrade is $297. It's $297, okay, for 3 months. That's it. You want to do it again? It's another $297. And I hope you guys appreciate that. People think we're nuts when we do that, okay? This is not like a gym membership. How do I get out of the gym membership? You can't, okay? This is not like that. We don't auto-renew. It's just $297. Because quite frankly, I don't like that crap that companies do. You shouldn't either, okay? I don't like companies continue to do that. This is 2020. We're online. Hey, it's $297. You want to do it again? It's $297. Okay. We want people that want to be here. Number 3, we archive everything. We understand that not everybody can watch everything live throughout each trading session. We archive it. Okay. And we're going to provide you access to our mobile application. You can actually download the archives. I mean, if you did want to fly somewhere, I don't, but if you did want to fly somewhere, you could actually watch our archives from 30,000 feet because you download them. We have an app that works just like the Netflix application. It's really cool. You could actually download it, and you can even watch stuff at like 2 times the speed. I sound like a chipmunk at that fast. Number 5, you can email us anytime and receive a response within 24 hours, including trade-related questions. Listen, most of the instructors here at TheoTrade, most of the instructors here at TheoTrade, we have held our securities licenses. What that means is most of us come from the brokerage world. Jeff Bierman, myself, Brandon Chapman. Okay, we've got a couple of instructors that have held securities license, others that have actually traded on the floor. We know, how to answer email-related questions. We're not going to hide behind, I can't say that. Listen, I'll tell you directly. You want to email me and say, what do you think about Microsoft? I'm going to say, hey, that thing's going to be the greatest short of all time, and I'll argue with you, okay? Because you don't want somebody that's just going to sit there and go, what do you feel, okay? You want somebody that's actually going to answer your emails, and that's exactly what we're going to do. Number 6, you're going to gain access to every course TheoTrade has done in the previous 4 years. Classes, coaching sessions, live trading sessions, all the archives are searchable. Name pretty much any topic, we got an archive on it. And I mean that. You name almost any trading topic, we've got an archive on it. It's been 4 years, people. Okay. Number 7, all of the trades that we discussed today can be done in an IRA or retirement account with as little as $2,000 in the account. People always ask me that. I trade in my IRA. Okay. Number 8, we at TheoTrade can help you get approved for options because a lot of brokerage firms say you can't do that here. Well, guess what? Here at TheoTrade, we have a relationship with E-Trade. We have a relationship with TD Ameritrade. We have a relationship with Tastyworks. Okay. We have a relationship now. Of course, it's going to be Charles Schwab. Okay. Everybody. Actually, one of the individuals I work with, she runs part of E-Trade. Okay. Another gentleman that worked directly under me, he actually runs education now at Schwab. Obviously, I have a lot of friends at TD Ameritrade. Okay. It goes on and on. Tasty. The people at Tastyworks, come on, I worked with them in the beginning of my career. All right, number 9. Okay, there are, remember, I believe actually tonight we have 40 riskless trade spots are available. We put on 40 riskless trade spots that are available because there are a lot of people logged on this evening. Listen, okay, it's riskless to you right now. Be one of the first 40. In fact, we're keeping count right now because a lot of people are enrolling for it. Number 10, listen, just get results, take action, enroll for TheoTrade now. There's absolutely no risk to the first 40 people. It's theotrade.com/collect. I'm going to pop the page back up here, and I'm going to answer some of your questions directly from the chat room. Again, let me post this up here, and it's theotrade.com/collect. Everything, that you're receiving here is listed definitively below. So you're going to get how to collect income being short, the workshop, 91 different classes, all the coaching sessions, everything. And you'll have access to our live class on this Thursday, May 28th. By the way, the class, I think you guys will really find this phenomenal. This class that I'm teaching coming up Thursday, it's very unique because I'm going to be teaching it predominantly from the trading application. It's less about a PowerPoint. It's less about, like let's look at textbook. We're going to look at risk. We're actually going to build risk. We're going to look at risk, and then we're going to actually learn how to manage that risk. So click add to cart. It's $297. Let me actually get to some of the generalized questions in here. Okay. Okay. All right. I love this. By the way, Daniel just asked me, made the payment. How do I know I'm in that first 40? You are right now. You're good. Okay. I mean, literally, there's people enrolling, and I can see it in real time who's enrolling and who's not. So I'll tell you I'll tell you what. In the next 5 to 10 minutes, I'll tell you everybody that's in the first 40 of the riskless spots over here. All right, let me actually come over here. What do the red or blue dots mean in the expected move screen? So okay, that the red and blue dots, what you're referencing happens to be the auto expected move, and what the red and blue dots mean are breaches of the expected move. The breaches. Blue dots, okay, are just breaches of the expected move. Red dots are breaches of the expected move at week's end. That's it, okay? And that's something, you can email me directly on that one. We can go into a lot more depth on that one, okay? So, again, there's a lot of people asking me, am I part of the first 40, okay? As of right now, I believe you are. We still have a lot of people tuned in right now. And again, by the way, I'll give it to you really quick, and then I'll come back to it right off the top of my head. This is so far what's gone through. Silvana B. from South Carolina, Philman W. from New York, Shazad Q. from Wisconsin, David D. from Illinois, James B. from Arkansas, Michael T. from Idaho, Lee H. from New Jersey, Donald O. from Colorado, Larry H. from Florida, Daniel F. from Portugal. Again, it takes me about 3 to 4 minutes to actually pull down more. Those first about 10 or 12 people are in the riskless deal. All right, let me get back to some of the questions, and then I promise I'll rattle off some more names, as it takes a couple of minutes for people to enroll, but it takes me about 4 or 5 minutes to actually see it. Okay, I like this. Pete was saying how to best deal with large after hours futures moves. So Pete, lately markets have been moving huge and overnight, which makes you have to actually see risk before it happens. That's exactly Pete, literally, that's what we're teaching in this Thursday's class. We're actually going to look at your risk, and we're actually going to take risk forward several steps. And what we're going to do is we're going to create, risk-averse strategies in and around whatever you have on. Okay, so whatever your aggregate position happens to be. And I don't want to go too deep more than that. Okay. By the way, it's not taking me to your collect page. Make sure that you guys go to TheoTrade.com/collect. We'll make sure to link you that particular page. So Marlene, hang with us. Okay. We'll make sure that you're on the correct page right now. Okay. Looks like there was possibly an issue with the page. So bear with me here momentarily. There's enough people that have actually logged onto the page that we're having a little bit of an issue with the page. So bear with us over here, and we'll make sure that everybody hops in there. Okay. So Pete, as I was saying, we're going to get you to look at risk from like this 50,000 foot view. What if the market goes up? What if the market goes down? And we're going to put on some preemptive positions to help mitigate degrees of that risk with a few of the strategies that we teach here. And it's important, that you guys understand that. Okay. All right, moving on. Okay. Somebody was just asking a random question here. What is a secondary shelf price? All right, secondary offerings and shelf offerings. What that basically is, that's a company that's decided to list more shares, at a given price. So instead of just doing an initial public offering, if a company comes out with a shelf offering says down the road, I want to list even more shares. Basically what the company is saying is they want more money. If they want more money, they got to list more shares, which dilutes the current shareholders when they do a shelf offering. Okay. All right. I like this one. Bill said, how about I've got too much negative deltas and it's killing me right now? Patience. Okay. Bill, got to use things like volatility back spreads against the negative deltas. That's what I've been doing to survive right now. Okay. You got to use things against the existing positions, like back spreads, because back spreads aren't going to cost you any money up front, Bill. You're going to go in there, and to curb some of your risk, you have the strategy that can be explosive if the market continues to move up, and it'll actually curb your existing risk. Something that we teach quite deeply here. You know what? Somebody said, what do you think of an inverse ETF like RWM? Yeah, that is absolutely hideous. Okay, there's huge drag to inverse ETFs. Just letting you know. By the way, the How to Collect Income Being Short workshop, okay, that workshop is going to detail just that. So no problem there. Those inverse ETFs will eat you alive. Okay, they really will. All right, let me see. Okay, how do we defend our risk and position goes against us with this strategy? So Eric, that's exactly, again, defending, okay? Defending positions is all about, okay, the class that's coming up. And that is, again, the Emergency Survival Guide to Controlling Your Risk class. That's what we're doing. We're actually going to detail, okay, how to defend the position. We have umpteen different classes on position defense and position, mitigation techniques. But this Thursday's class is how not only to understand that risk, but to do something about it, okay? All right, make sure that you're good there. All right. By the way, somebody said, so you sell puts when you expect the stock price to go up and sell calls when you expect the stock price to go down. Okay. Actually, no. I'm not here with expectations. I'm not going to tell you that I have expectations of what's going to go up and what's going to go down. We're going to maintain positions. We're going to be rather consistent with both long and short positions on simultaneously, okay, in various underlyings. So to go into any more depth, I think would probably do you a disservice at this point, okay? But rest assured, I am not here to tell you, like, this is going up and this is going down. We do have instructors that do that. We do, that take pure directional positions. What I'm trying to construct tonight of How to Collect Income Being Short is to construct, okay, a position, well, in this case, that's short, that I can actually sell some premium against, okay? A lot of what I cover in this How to Collect Income Being Short has a tremendous amount to do with risk reward, okay? And I'm not here to tell everybody, get short, okay? It's not about that, okay? It's about you understanding that to survive in this business, you're going to have both some long and some short on. By the way, of our 40 riskless spots, we're seeing a lot of people enrolling right now. So by all means, got a few more over here. By the way, Kim K from Wisconsin, Chandra G from Virginia. I think it's I don't want to butcher this. Hughes A from Canada, Brett N from Florida, James I from Washington, Jack C from Hawaii, Alexander K from Florida. By the way, thank you guys, because I'm a little bit delayed in seeing some of the names come through. Thank you guys for enrolling. You're all obviously in the first 40 riskless slots we have over here. Back to the questions for just a minute or two, then I promise I'll wrap things up. Just want to make sure everything's good. Again, the single largest question that's coming through is how do you protect against the XLP moving higher? Okay, one of the recent classes that we just taught here at TheoTrade is based right around that, and it's volatility back spreads. And those back spreads, okay, have been home runs in reducing risk of existing positions. We use a number of hedging strategies to reduce our risk. And again, this is going to be explained in so much more depth, obviously, not only in the class that we're doing on Thursday, but as you see us trade, okay, as you watch our existing positions, okay, obviously being wrong, okay, and coming out okay is a big portion, again, of sustaining your risk in a marketplace that's going to be wildly volatile. Okay. Another last question here. By the way, during your time watching accounts, what option strategy worked the best? You know what? If you wanted to zero in, Brett, if you literally wanted to zero in on one option strategy, okay, and only one option strategy that worked the best, okay, the in-out spread is probably right up there. Okay, and that's something that we coined the term, if you will, like the in-out spread, but the performance of that has been phenomenal. But I'll tell you, a very, very close second is what we're doing here with How to Collect Income Being Short. Okay, and the irony is so few people Okay, so few people do what we're actually teaching and talking about this evening. So few people do it, and I guess it's kind of ironic that some of the most successful strategies tend to be the ones that people they're just not employing enough of. All right. With that, I think I've got the vast majority of the questions answered. Again, a lot of people are enrolling right now, and I'm about 4 or 5 minutes delayed on seeing you guys enroll. I thank you very much. If I did not mention your name and you have enrolled tonight, again, thank you. Go right now to TheoTrade.com/collect. Enroll, be one of the first 40 people into the riskless spots. Obviously, we have the class coming up. It is this Thursday, so you do have to get enrolled to see the class live this Thursday. We're going to have Q&As that follow this particular class, so there's going to be times you don't just email us. You can actually come into the chat room and literally communicate with us directly, okay, amongst some of the other TheoTrade clientele. So by all means, thank you guys very much. Again, it's TheoTrade.com/collect. Have a wonderful evening, everybody. Bye-bye.